Anthony.
Hi Cheryl, how are you?
Good, thanks. How are you?
Yes, I'm good, thanks. Okay, great. So today we're looking at the second last chapter actually. Obviously, your study guide has changed a little bit, so I just want to raise a few points regarding the PowerPoint presentations that you've got. Obviously, you have a few additional chapters which you actually don't need for your particular course. Those chapters used to be part of FAC 1601, but obviously they've changed the module slightly. They've actually removed some of the content. So in your study guide, Learning Unit 8 is branches. If you go look at the actual contents page, we've just got those two chapters left. We've got branches, and then we've got statement of cash flows. And that's pretty much it in terms of content. And then we can look at past papers. So if you
I
look,
actually wanted to tell you that they moved my exam. They moved it
did they move
further.
it
It's on
earlier
the
or
8th of,
later?
later. It's on the 8th of December.
Wow, so late. Okay, because yeah,
Yeah,
looking at we have classes till the 17th of November, and then you said they moved it to the 8th,
of December, yes.
8th of December. So that's a Tuesday as well. Okay, well, let's see how far we get in terms of past papers. If we can finish all those past papers that the newer ones. So I've got older ones. Obviously, I want to try to do those newer past papers. So let's try finish all of those new past papers, and then if we do need an extra week, we can maybe do that just to cover more past papers. But I've got a question bank that I can obviously send through to you, and there's answers to all of those past papers. So my priority is obviously to get through newer past papers, so at least you have a better idea of what they're going to be testing. Content wise, they've removed a few chapters actually. So if you look at the actual notes, the Excel spreadsheets, we need to refer to the last set, study unit 9. This one is looking at branch accounting. They changed the numbering slightly. 7 is actually cash flow, so we'll come back to this one. And then obviously 8 they've removed. This used to be part of 1601, but it's obviously not part of it any longer. They've taken out the financial statement analysis. Okay, so we don't actually need that set of notes. That you'll actually cover in other subjects. If you do financial management, you'll see the ratio analysis is actually part of one of those modules, and you're actually using your accounting knowledge to complete those sections. Okay, so we literally have two sections to cover. Obviously, study unit 8, which is branches, and then the last one in your study guide, which is the cash flows. Okay, so you're gonna have to just maybe I'm gonna actually renumber these just to make it in line with the newer version of the module. So this is actually support material 8 now, and then this would be branch accounting, which is study unit 8. Okay, it's a very short section. There's not a lot of theory, and then we need to look at practical examples. Okay, there we go. All right, study support 8. Let's save that. Okay. So I'm going to start off by going through theory, and then once we've gone through the theory, we can obviously look at the content in the textbook. First thing we need to look at, definition of a branch. Do you have any idea what a branch is?
I remember we went over this, and I can give you an example. So it's kind of like how you have different branches of banks. So, like, Standard Bank would be a branch, like in each area.
Yes. Okay, so when you have branch accounting, each of these business centers are branches, but they're all part of one company. Who makes the decision? Does the head office or do the branches?
Head office.
Yes, so this is very important. In terms of operations, all the decisions that are made within the company are made at a head office level. So head office is going to determine how those branches operate. they basically just filter through to the head office. Okay, so you used banking as an example. Banks have branches across the country, and obviously those branches are controlled by the head office. Yes, there might be a branch manager, there might be someone at the branch that's more senior that can maybe help in terms of decision making, but they're just following instructions. They're just applying or implementing what the head office has decided to do. Okay, so when you're looking at branch accounting, just remember that the focus is always from a head office perspective. So when you're looking at the accounting, in other words, when branch A accounts for its income and expenses and its assets and liabilities, all of those assets and liabilities and income and expenses actually belong to the head office because it's one organization, it's one company. But it's one company reporting on several different business, let's say, units, okay, in different areas, right? So you could have one branch maybe in Gauteng, you could have another branch in the Western Cape, another branch in KZN, another branch in Limpopo, wherever. Okay, it doesn't matter where the branch is just going to be following instructions carried out by head office. Okay, so a nice way of looking at it would be a premise, okay, a business center. Those are some of the words they use to describe a branch and its functioning in terms of the business's operations. Okay, so here I would obviously refer you to your textbook. Your textbook would obviously give you a lot more detail and, let's say, background regarding this particular topic. When you look at tests and exams, you'll see UNISA does test branch accounting, but they tend to limit the extent at which they test it. So it'll either be a tier count type question. It might come up in short multiple choice perhaps. If it is online, it might actually be, or theory might even be a focus if it's online and they do give you multiple choice. Okay, but generally if you look at past papers from years back and even the more recent ones, you'll see that they generally test this as a tier count. In other words, they'll test maybe your branch inventory account, or they'll test a specific account that relates to the actual operations of the actual branch, okay, or the head office. It could be a head office account that you need to provide for that maybe is affected by a branch. It could differ depending on what they choose to test. It'll always be in line with the textbook, okay, well, the study guide, I should say. The study guide is your best indication or guideline in terms of what UNISA will focus on. Okay, remember the textbook is there to supplement your understanding and your knowledge. There you'll see a lot more information, a lot more examples. But again, just focus mainly on what UNISA is going to assess, because yes, you can go through additional content, but it might not be that useful, especially when you're looking at past papers and assignments and even exams. Okay, I did see your message about the assignment 2, and I looked at it, and I see it relates to the cash flow question. So I don't want to look at it now because we haven't done any cash flow. So it would be pretty pointless going through that because I don't think you'd be able to interpret and follow as well as if we had covered the content first. Okay, so I want to get to cash flows. I want to complete that last study unit in the actual study guide, which is study unit 9. And then once we've covered the content, we can actually look at those questions in the actual assignment, and then we can raise certain issues or problems that we can maybe send through and debate in terms of UNISA's option, okay, and what they've chosen. Right? Obviously, they've given you answers because you viewed that online, but it's always nice to see a solution. Okay, if they're saying it's a particular answer, then they need to give us the evidence or the backup just to show us why. Okay, so that's something that we can maybe look at later on. If they do give you that feedback, then we can obviously look at it as well when we go through it. Okay, but important is to obviously cover theory. Okay, yes?
For assignment 1, I did query with them and they did send us
a memo.
The solution.
Okay, that's good.
Yes.
Okay, I think let's look at that later on. Let's get through study unit 8 so at least we stay on track, and then later on we can actually look at that one question. Yeah, there was one question from that assignment that it was actually the liquidation, right?
Yes, the
Yeah, it
last
was the
question.
liquidation one that we were debating in terms of what was the right option. Okay, yeah, we'll look at it later. Let's first get through this, and then we can come back. Study
Okay.
Unit 8, second question. How can we manage these branches? We already spoke about it, head office. All right, they're dependent on head office. So in other words, any resources or any assistance that A, B, C, or D requires in terms of being a branch needs to be provided for by head office. Right, so if branch A requires more, let's say, stationery, or if B requires more inventory, or if C requires more cash, all of those resources are provided to the branch from the head office. Okay, so remember it's one business, but it's separated into these business units or these business centers. And that's what you need to focus on. So when you're looking at the accounting, each branch is provided for separately, but it's provided for separately from a head office perspective. Okay, so the head office is still going to manage each branch. They're still going to account for all the income, expenses, capital, drawings, all of that stuff. Okay, all the accounting elements. Okay, obviously you're not going to have capital and drawings, okay, because there's no owner of the branch. Okay, all of it filters through to the head office. Okay, but the other four accounts, the assets, liabilities, income, and expenses, those you're definitely going to have to look at, especially when you're considering the management of those dependent branches. Okay, so just remember it's centrally controlled. Head office is the key. Head office basically runs and manages those branches. Right, the textbook talks about different accounts, okay, and probably the study guide as well. We'll go through the study guide and we'll see what they've included in this version of the study guide. When looking at branch accounting specifically, from the textbook, you need to highlight a few vocabulary words that we need to be familiar with. Right, so now that you know how a branch is structured, okay, remember head office, controlling, managing all these separate business units. The first thing we need to look at is obviously stock, inventory. Right, we know inventory is an asset, and we know we can reclassify it and we can give it any name. Okay, so inventory can be called raw material. Inventory can be called work in progress. Inventory can be called finished goods. Inventory can be called items that we've bought, okay, to resell. Right, so those are things that we can consider in terms of inventory. Okay, that's something that you would have looked at in 1502 when you did the first module. Okay, in this module, you're even taking it a step further because now we don't only have inventory as inventory, but we have inventory that belongs to the branch, and then we have inventory that's basically belonging to the head office. Okay, so whatever's sitting at the head office would be inventory that the head office has in their possession. If the head office sends inventory to a branch, obviously head office needs to manage and control its stock. So they need to account for how much goods is going to branch A, how much to B, how much to C, how much to D, etc., etc. Right, so depending on how much inventory they've given to each of the different branches, each branch needs to manage and control their inventory because they need to report back to head office. Right, and obviously, if a branch is well managed, okay, there isn't going to be any problems with missing inventory or inventory that's damaged or stolen or anything like that. Right, so the reason why you need to have separate accounting, it's because of that record keeping. Okay, and sometimes, even if you look at a scenario like this, right, each branch might be competing in terms of performance. Okay, there might be an internal, let's say, performance evaluation that will be done to determine which is the better performing branches. Okay, so maybe, I don't know, I'm going to ask you, Cheryl, because
Yeah.
before I came, obviously, I was out this morning. I had classes on campus again, but during the break, I actually went past Monte Cassino, and I was actually quite shocked to see how many of those businesses have actually closed. It was quite a how can I say? It was quite saddening in a way. Obviously, seeing so many places. So obviously, you're in Kempton Park, that area of the world. Have you been to Emperor's Palace recently? Is it the same? Have lots of
Yes.
shops closed there as well?
I think it was just the hot dog cafe
Oh, just
that
the hot dog
closed.
cafe. Okay, but
Yes.
all the other restaurants and the shops are still open.
Yes, yes.
Okay,
It was
that's
just
that's quite different. So it looks like Emperors is doing a bit better than I think Emperors is Piedmont. I think so. It looks like Piedmont is
yes.
doing a bit better than Togo Sun. But yeah, it was quite saddening. I don't know if you've been to Monty recently, but I mean the bookshop is closed. There was a really nice Greek restaurant that's closed. There's even there was a nice Indian restaurant actually that I think it was called Durban Curry or something like that. But it was a restaurant that was also very popular, but also closed. So it was quite shocking to see that so many places have closed. But the reason why I'm mentioning that is because we're looking at dependent branches. Okay, so you might have like a franchise. Okay, even one or two of the franchise stores were closed. Okay, it might be closed because it was maybe early, maybe they open late on in the afternoon, but they weren't open. So, but and
No,
well,
but some stores actually aren't opening because I was actually at Sandton City, and some
okay,
they're literally waiting for Corona to be over for
yeah,
them to open.
yeah,
Because I think businesses are operating at maybe like 70% of their revenue.
yeah. I think it's 66%. I think
So
that's what government's allowing, and even like each of the stores you go into, there's always like a limitation on number of
yes.
customers and things like that. Yeah,
And I don't think like these casinos or malls are lowering rent anymore. I
yeah.
think from October it's like full rental, to
Yeah,
be
probably.
honest.
Yeah. So it was quite an eye opener. Like, I mean, I've been a bit cautious in terms of going out and stuff like that. But obviously, it's level one now, so I'm a little bit more open to going to different places. But it was just fascinating to see that obviously branches, different branches. So speaking to the accounting of it, okay. So obviously, different stores. So there might be a branch in Santon. Okay, there might be a branch in Santon. Okay, there might be a branch, maybe in. Let me think. What's it? Lakeside Mall. Okay,
Yeah.
right. But they all belong to the same company, the head office. Right. So depending on the branch,
Just a question.
yeah,
With say like restaurants, would we consider those to be branches or franchises?
it depends how it's structured. So if you buy a franchise if you buy into a franchise, you become the franchisee. So the franchisee could be independent. Okay, you would own your own store and you would run it, but
Yes.
you would run it in line with the rules as per the franchise agreement. Because when you sign on, so
Okay.
for example, something like let me think of an independently run franchise. That's
I
not.
think like Nando's is independent.
I'm not sure. I don't know enough about Nando's. Does each?
Oh,
So, for example, okay. So what I do know is with Spa. Okay, with Spa, every Spa is independently run. Yes, they are controlled by head office, but like you'll have someone owning that particular Spa. But now, if you look at like something like Woolworths, okay, Woolworths, you don't have the same thing happening. Okay, obviously Woolworths is a head office, and then you have branches, right? So when you talk about a franchise would be when you have a franchisee, franchisor, and that's not what we're looking at here. Okay, a franchise. So if let's say, okay, I don't know enough about Nando's to talk about Nando's, but you're saying that Nando's can be independently owned. So if you had to buy the rights to open up a Nando's store, that store is yours and you can control it. Is that right?
to
And
my
then the
knowledge,
accounting
yes.
would be done internally. So Nando's would have their own head office accounting, and then obviously each separate branch. Okay, if it's a branch, that means Nando's controls the branch. So that would be something like a McDonald's. Okay, McDonald's is controlled by the head office, and then each branch has to basically follow the franchisor's rules and regulations. Okay, it's not often that you have a scenario where you have a franchisee, franchisor, and a branch. Okay, so with McDonald's, it's more centrally managed. Okay, so I think I said franchisor for McDonald's, head office. I meant centrally controlled. Okay, so even like a KFC, centrally controlled, unless they actually give away the ownership in terms of like as the franchisee, you have to manage that store, but you just have to follow the rules. It's a little bit different. With branch accounting, you're looking at this. So see, this is the question mark. Okay, the question mark is the control lying with the franchisee or is the control lying with the franchisor? If the franchisor is the one that basically calls the shots and literally decides how the actual branch manages itself. In other words, they hire, they fire, they give resources, all of that stuff. If it's done like
Okay.
that, then it's a branch. Okay, so for example, a bank is definitely like that. Each and every branch, okay, at the bank would be centrally controlled. Okay, each branch has nothing to say in terms of operations. All of it comes from head office. Okay, when it comes to fast food and like takeout and stuff like that, it could be either or. It all depends on this, the control. And that's why I'm saying, for example, like Nando's and like Spar, Woolworths, all of those like big stores that have lots of branches. If those branches are separately owned, and it's a franchise rather than a branch. Okay, if it's a branch, it's controlled somewhere else, head office. If it's a franchise, the franchisee, the person that bought the rights, that person can run their business. Then they've actually got to buy goods, but then they don't buy goods from anywhere. They buy goods from the franchisor. Okay, the franchisor is actually their supplier. Okay, so it's still separate, but it's like linked because it's a franchise. So that's a little bit different. Does that kind of make sense?
Okay.
Do you see the
Yes.
differences?
So basically, with branches, head office can basically run the show so they could
Exactly.
hire and all of these things. But with franchises, I think there's more rules in terms of maybe like menus and
Correct.
suppliers, but then they don't have control over internal problems
That's
or
exactly
like
it.
staff. Okay, I get what you're
Yeah, that's
saying.
exactly it. Because if you own the franchise, you can obviously bring in any employee that you want to. Obviously, you've got to train them
Yes,
and you might have to take them to head office because head office has to manage the quality, etc. But as you said, it's more rule based because you sign that
yes,
agreement. Okay, that franchisor franchisee agreement basically outlines what you can do and what you can't do. But the control still lies with the person owning that store. So if you own the store and you decide how to run your store and you're not being told how to run the store, then it would be considered a franchise. If it's a branch, now you're being told how to run the business and you don't have a say. Okay, head office decides and they just implement. As the branch, every single branch, whether they like it or not, needs to follow what head office says. Right, and that's how banks are managed. Banks are definitely structured this way. Okay, there are separate business centers, but all the control, all of that lies with the head office. Okay, there'll be a big manager in terms of hierarchy, a manager that sits at head office, and then that manager would basically manage every single branch manager at a different branch. Okay, so you might have they talk about like provincial and then they talk about national, right? So depending on your
yes,
level, okay, if you know anyone in banking, they'll probably tell you the same thing. So there'll be different levels in terms of oversight, okay, or management, right? So if you're like a national manager, then obviously you manage the country. If you're a regional manager or a provincial manager, then you manage that province. Okay, so you might manage like all the branches. So you mentioned Standard Bank earlier, so I'm just going to use that as an example. So if you were the provincial manager of Standard Bank and you were looking at Gauteng, okay, obviously every single branch in Gauteng would be reporting to you as the provincial manager. Okay, and obviously at each branch there'll be a lower level manager. Okay, in corporate and with these structures, okay, you get multiple levels of management. Okay, one person reporting to another person, reporting to another person, reporting to another person. That's just how it's structured. Because remember, head office has to basically direct and manage all those branches. Okay, so they need people to help with that. Okay, that's why you have all those different levels. Right. If it's a franchise, then you literally just have the franchisor. Okay, that could be the company selling the rights, and then you would have the franchisee, and then that person can run the store. But as long as it's in line with the rules and they're not, how can I say, they're not disobeying the franchisor in terms of what they've said they have to do. Right, so they have to use certain suppliers, they have to use certain goods, input, and so on. The quality of the goods have to be similar as well. So that's something to consider. Okay, but yeah, I think we probably have a pretty good idea of what a branch is, right? And how it differs from a franchise. Is that okay?
Yes.
Yeah, so that's just the background. Obviously, it's similar, but a little bit different because of the control aspects.
I
Okay,
just
so
have another question.
yes.
When we're looking at this accounting, are we looking at it from the head office point of view, or are we the branch?
It's actually both, but it's more from the head office because remember, head office is going to report to their shareholders. So, for example, Standard Bank has to report to their shareholders. Standard Bank is a public listed company, so every single branch that Standard Bank has, obviously, the accounting at that branch will be then consolidated into one set of financial statements. So when you look at branch accounting, it is higher level. Okay, but when you look at specific accounts, you might have an account that belongs to the branch. But when you look at the actual debits and credits, it's always from the head office point of view. So we'll look at it. You'll see that you'll actually have you'll kind of have like two assets, but they're the same asset. But obviously, the one asset is just showing location. So maybe a good example is here. Let me show you this one here. Head office accounting records. You have branch inventory and you have inventory to branch. Okay, both of those accounts are considered inventory accounts. Both of those accounts are considered asset accounts. But the only difference with account number 1 and account number 2 is where is the inventory sitting. That's the only difference. So
Okay,
is the
so here
inventory...
you moved it from the head office to the branch.
Sorry, I didn't hear that. Say that again. What about the head office to the branch?
So in this example, stock was moved from the head office to the branch.
Correct. Yes, that's right.
Okay.
Okay, stock is being moved from the head office to the branch. Why? Because you're crediting the head office's account. This account belongs to head office. This account, inverted commas, belongs to the branch. Okay, the branch isn't separate from the business, but it's accounted for separately. That's the difference.
Okay.
Okay, so if you can wrap your head around that, then you've actually got it, because that's all you actually need when you're doing this particular section. You just need to be able to identify what belongs to the head office and what belongs to the branch, and then you need to account for it using the tier accounts. Okay, which we'll get there. You'll see there are specific tier accounts that the head office needs to provide for, and there's specific accounts that the branch needs to provide for. And obviously, the branch is going to be consolidated as a head office type reporting scenario. Okay, because remember, there's only one set of financial statements, but there's maybe 100 or 200 or 300 different branches. So every single branch has to account for their own operations, but it all filters through to the head office.
Okay.
Okay. All right, yeah. So yeah, good question. So in terms of perspective, it's actually both, but you just need to look at the account. Right, so account in red, branch inventory. Who does this belong to? It belongs to the branch, but it's accounted for by the head office. Does that make sense?
Yes.
Okay. Same with this one. Account number 2, inventory to branch. This is, again, accounted for by head office, but representing a head office inventory account. And then you can have bank as part of the scenario if you allow local purchases at the branch. Okay, so a branch might be able to buy its own inventory. That depends on whether the head office is giving the branch resources that they can make use of for buying certain things. Does that make sense?
Can you give me an example?
Okay, so if the head office allocates a budget, and let's say they give the branch a certain amount of cash, rands, okay? And then obviously the branch can use that in order to purchase goods if they require. Okay, so it might not necessarily be inventory, because inventory would probably be sourced from some sort of warehouse. Okay, especially if it's a very, 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 very large company. Okay, because very large companies manage their own distribution. But if it was something like stationery, for example, okay, the stationery might come from the head office if the head office is buying all the stationery, or the head office might just send a certain amount of cash and allocate it towards stationery. So, for example, they might just say, well, instead of sending the branch 10,000 Rand worth of stationery, they're going to give the branch 10,000 Rand and say, this is for stationery. You buy your stationery if you need stationery, that type of thing. It all depends on how stringent or how strict the management is. So when you look at the structure, you do get scenarios where the head office is extremely strict and they don't give decisions, or they don't delegate any decisions, or they don't delegate any responsibility to the branches. Okay, that's a very, very strict type of branch head office type arrangement. Okay, and generally banks are like that because banking is very, very heavily regulated. So they have to report on everything. So when it comes to branches, they're very strict. Okay, because obviously you can't have one branch doing whatever it likes and then another branch not. It needs to be consistent. But then you might have another business which might not run the same because they're not in banking. There isn't as much regulation. It might be something more like retail. Okay, buying and selling goods. Okay, there they might be a little bit more lenient in terms of the operations. Okay, they might be more willing to give a little bit more responsibility to each branch rather than the head office doing everything. Because when it comes to like goods, when it comes to buying and selling stock, obviously the person at the branch would probably have a much better view on which stock items are selling and that type of thing. And then they might even just delegate that responsibility and say, well, okay, you're the branch manager. You decide how to manage your store. You'll know what stock is short and what stock isn't short. The head office is not going to have to manage that. Okay, if they do have very, very good systems and those systems can track everything, then the head office might take that role and they might decide where to send how much goods and when they need to send those goods. But in retail, because retail is still quite, well, in South Africa, I should say, it's not as, like, for example, Amazon. I don't know if you've watched any of Amazon's videos. You can actually find quite a few videos on Amazon on YouTube. And they'll even show you how they manage their inventory. Okay, if I did 1502 with you, I would have shown you a video looking at inventory management from Amazon and how they do that. Because in 1502, you talk about perpetual and you talk about periodic. And obviously, if you're thinking about how big Amazon is, you'd probably think Amazon is using periodic, but they're not using periodic. Amazon actually uses perpetual. They track everything all the time because Amazon has very sophisticated systems, computerized systems. Okay, and they even use robots and stuff like that to track all their goods, right? And that's why Amazon is so successful, is because they literally track everything. So the chances of theft happening at Amazon is lower, especially because Amazon's such a big company and they have so much stock. So they don't want stock going missing. And obviously, if it's periodic, if Amazon is a $1 trillion company, which they are in terms of value, Amazon is also one of the world's most valuable companies. Not as valuable as Apple. Okay, we spoke about Apple not so long ago when we looked at companies, but just to highlight Amazon as a company, they're also one of the bigger companies in the world, but they manage huge amounts of stock. Right, so even if they lose 1% of their stock because of theft, okay, because you're dealing with trillions of dollars, 1% of a trillion could be a few hundred million, and that could be a concern for a company like Amazon. So you can use perpetual. It's very expensive, but if you have the resources and you can implement those systems, it's a really great way of minimizing theft and maximizing efficiency, because Amazon can deliver almost anything anywhere in America. And they're actually lucky. They've got same day delivery. Amazon, you can buy things through Amazon in South Africa, but it takes forever because it has to be literally shipped and you've got to use a third party carrier, etc., etc. It's a bit of a hassle. You'd much rather just use a local supplier. But the point is, when looking at companies that are very strict, okay, a company like Amazon would be very strict because they would be managing all their branches, and their branches would be those different distribution centers. Okay, and that's what I'm trying to look at here. So if you had to look at South Africa, because we don't use as sophisticated systems, not everything is tracked all the time. Yes, a lot of our big retailers, the likes of ShopRite, Pick n Pay, Woolworths, let's see, Massmart. Okay, those are the bigger, so macro, right? Yes, they might have very sophisticated systems, but not as sophisticated and not managed by robots and AI and machine learning and all that stuff. It might be the case in the future, but it's not quite there yet. Right? But Amazon, if you do research and you look at how they manage stock, it's impressive. Okay, and you can actually realize why they're so big and why they're so successful. Right? It's because they leverage technology. Okay, Amazon started out as a tech company, online business selling books. That's the story of Bezos, if you do research on him. But Amazon was just a bookstore, online bookstore. That was all it was. And now it's obviously in almost every single industry out there. And Amazon's obviously under criticism because they're getting so big and they're taking over a lot of those smaller industries because they're actually producing their own products. So whether that's anti-competitive or competitive, there's a lot of debate about that. Okay, but yeah, I don't want to digress too much. But the point that I was describing there is you get head office companies that are very strict and you get head office companies that are more lenient. In South Africa, banks are very strict. Okay, other branch type scenarios, okay, maybe like retail, okay, so buying and selling groceries and that type of thing, they won't be as strict. They might give more authority or more decision making or more responsibility to the individual branches. Okay, but in certain industries, you have to have that level of oversight because in banks or in banking, those banks need to adhere to very strict regulations. Okay, so the stricter the regulations, the more oversight, the more control, the more head office involvement. Okay, because obviously head office has the knowledge, okay, the expertise, the skill to make sure that they don't do anything wrong. Okay, so you obviously wouldn't want to rely. Can you imagine the branch manager at a bank? Okay, the branch manager at the bank is probably someone that has a lot of experience, okay, with clients. Okay, so maybe started in the branch and then built their way up to branch manager. At a head office, okay, you're not going to find branch managers at a head office. Okay, at a head office level, you're going to find maybe CAs, CFAs, okay, you're going to find SEMA. Those people are going to be sitting at head office, right? And those people are going to be running the entire organization, not just one little branch. Okay, so you can see that the decision making is obviously at a higher level as well, right? And that's why in certain scenarios, the control has to be stricter because head office needs to comply with all the different rules. Okay, all the rules that the CAs need to comply with, CFA, etc., etc., all those rules need to be followed correctly. And then they filter that down to the branch. They tell the branch, this is how you need to do it, this is how you must account for things, and this is what you have to do. That's it. And they've just got to follow the rules. Okay, so branches have to follow these rules. Right, so the question that I've got here, what happens if inventory is returned to the head office? What do you think will happen?
So I would debit inventory that's at the head office because that's increasing.
Which
and
is
then
called?
I would inventory to branch.
Yes. Okay, and then?
I would I would credit branch inventory because
Good.
The inventory at the branch is decreasing.
100%, yeah. So it's literally the opposite. Okay, as you said, this represents head office stock, head office account, okay, inverted commas, right? And then obviously the branch inventory is what the branch has. Okay, it's all accounted for centrally Okay, because one set of financial statements, one business, one company, but two separate locations. All right, here you've got sales. Okay, remember we spoke about sales as being one business's sales. But remember, we said each branch needs to manage their own operations because there could be performance evaluation. I'm just going to write PE. Okay, performance evaluation. A might be measured in terms of its performance. Okay, I actually remember why I spoke about Monte Cassino and then I asked you about Empress Palace. It's because not all those branches or stores would have closed. Okay, the underperforming stores would be closed. All right, so maybe in Empress Palace, it is Empress Palace. Yeah, at Empress Palace, the branches there are maybe still doing well because maybe the airport's close by. I don't know how many tourists we're getting. I don't think any at the moment. I don't think international. Well, actually, I think it is open. Level 1. I think international travel is open, but I know local travel is definitely open. I mean, that you can obviously make use of. But the point here is underperforming branches. A and B are two separate branches. A could be performing well, B could be underperforming. Maybe because the traffic in the mall or the traffic at the casino has dropped, okay, and obviously that branch can't stay open. Right, and then obviously you have other branches as well, and they're all being monitored separately. All right, so when you talk about sales, if a branch is going to be selling goods, they need to account for those sales as part of the branch inventory account. Okay, it's a little bit different because you've actually got the inverted commas, the sales and cost of sales in the same account. So it's actually like a trading account, but just for every single branch. That's kind of what you're doing. When you're looking at sales of inventory by the branches, so if branch A had to sell goods, branch A would have to either debit bank if it's cash, or they would have to credit the branch debtors. Notice, you have to identify where are the debtors. Okay, if it's cash, cash is cash. Okay, you don't have to show, you don't have to say branch bank. Okay, bank is bank, money is money. Remember, it's all one company. So the company will account for the cash at all the branches, and that cash would be belonging to the company itself. The reason why you need to differentiate between debtors and branch debtors is because each branch needs to follow up with their debtors, and you need to manage those customers. Maybe certain branches might have high levels of bad debt and other branches might not. Okay, it's something that the branch needs to manage. Okay, the branch needs to account for who they've sold goods to. Right, if they've sold goods on credit, they need to collect the outstanding debtors amounts. Okay, so you do have branch debtors instead of normal debtors. And then instead of having credit sales, notice it's credit branch inventory. Okay, so there's no sales for the branch. Okay, it all gets done in the actual branch inventory account. Okay, so any sale that occurs at the branch would be accounted for as part of its inventory. Because think about it. Goods that the branch gets will obviously be debited, right?
Yes.
Okay, and any goods that they sell would be credited, right?
Yes.
Okay, so if you have one account, if goods come into the branch account, branch inventory, okay, you'll see it later. There should be some examples in the textbook. When goods come in, debit plus. When goods go out, credit minus. That's all you're doing. And you're literally accounting for the movements.
Would we, back to the elements, when we look at branch inventory account, would it be like a negative asset or a income?
No, branch inventory is still an asset account. You're just accounting for the stock as a movement of inventory instead of an increase in income. Okay, you're not showing income in this account. You're showing the stock that's moving in and out. That's what you're doing. There is no sales. You're just showing the stock that went and the stock that came in. So in other words, it's an asset account, and you're looking at assets coming in and assets going out. Obviously, the assets going out would create okay, a sale, but for the main company, not for the branch. The branch is just managing their stock. That's what the branch is there to do. The branch is there to sell stock, but at that location. And that location is selling goods for the head office, for the company as a whole.
Okay.
Okay, so you're not accounting for the sale, you're accounting for the stock. The accounting of the sale is treated as a movement in stock. That's why you're crediting the branch inventory, because any inventory that the branch obviously loses, okay, would probably be because of a sale.
Okay.
Okay, certain branches can have theft and things like that, but then that's something different. Okay, that we need to look at separately. Okay, if the
Okay.
branch loses stock, in other words, if they decrease their stock, it must probably because of sales. Okay, why else would the branch lose stock? It must have been because of sales. Do you see that?
Yeah.
Okay,
do
so
we
the head
have a
office
sales
controls
account
the
when we're looking
branch
at
using that as a principle or as a basis. Make
Okay.
sense?
Yes.
Okay. And then the last bit is just a note about the discount. Okay, remember each branch will be managing its own debtors. Right, so when you have a discount that is applied at a branch, at a particular branch, okay, you would apply the discount, but again, you're going to be crediting the branch debtors account, not the total debtors account. Because remember, the total debtors account will be the debtors control. Debtors control would have everything. Okay, and obviously debtors control would be a combination or a consolidation of all the debtors across the board. Okay, so debtors at each branch, and then obviously at each branch, those debtors are being managed by the branch. Okay, because you wouldn't expect a branch in, let's say, the Western Cape to collect debtors from a branch in Gauteng. That wouldn't make any sense. Okay, so the branch is responsible for their own clients. Okay, if you're selling goods to clients of your branch, it's your responsibility to receive the cash or to collect the cash from those customers from that branch. Does that make sense?
Yes.
Okay, it's like a store account. Maybe you have a store account at one branch. Okay, just because you have a store account at one branch doesn't mean you can use or you can like when you're paying off your account. Okay, you'd have to pay off that account at that branch because that branch records your credit. They record how much credit you have with them. Okay, because it's a separate branch and the branch needs to account for their customers. All right, so how do we actually bring all of this together? In other words, how do we start calculating certain things? Well, some of the things that you'd have to look at is property, plant, and equipment. Okay, can a branch have property, plant, and equipment?
Yes.
Yes, they can. All right, who's going to provide the branch with the property, plant, and equipment?
I would say head office.
Correct, yes. In most cases, the head office would be responsible for managing the capacity at each branch. Okay, so maybe this is something you've also seen in the past. Okay, a lot of the branches, okay, the bank branches specifically, a lot of them have done it over the years. Okay, but you've probably noticed, or maybe you've seen certain branches being, let's say, upgraded, inverted commas. Okay, where they closed the branch down for a few weeks because of renovations. And then once it's open, it looks all nice and it's different and the layouts change, etc. Okay, who authorized that? The head office. Okay, the head office would have decided on renovations for that particular branch. Right, so in most cases, those expenses, those major expenses, will be covered not by the branch, but by the head office. And the reason for that is obviously resources. Okay, the head office will have more resources and obviously operations. Okay, managers decide on what to do. Okay, managers at a high level decide what the branches are going to look like. Okay, generally all the branches will have to be renovated so they all look the same. Okay, it's kind of like a uniform thing. So if they improve one branch, all the others will be improved as well eventually. Okay, it's pretty standard when you're talking about banks, okay? Because banks run very strict, okay? Head office is very, very, very important at a bank level, okay? All right, so that's the first thing. Notice here, minor payments, that can be paid for by the branch, okay? Either through petty cash or through cash, depending on how much resources the branch has been individually provided for by the head office. All right, if you have branch expenses, okay, so in other words, the branch needs to pay for certain expenses. It might be operational expenses. Do you have to differentiate? No, you don't. Right. You should though, but when we look at the accounting, they don't. They just group it as one debit. Okay, debit, and then they just group all the branch expenses as one line item. Okay, why? Because it's an expense. Okay, all expenses will obviously be debited, and then the head office will credit the bank. Okay, the bank relating to the head office, so the head office pays for it, or depending on what the expenses are and whether the branch can or can't pay for it, it might come out of the branch's petty cash, perhaps, if the branch was given petty cash, or if the branch was given their own cash. Okay, so cash at the branch. Okay. Something else to consider, NB. Goods in transit. All right, what happens if you have the branch here, there's A, and then you have the head office here? Okay, your head office is in Gauteng, okay, GP. And then you've got a branch in KZN. Okay, Natal. Okay, maybe N. I think I'm just using GP as the number plate. Okay, so N, and then Western Cape, I think, is WC. No, is it? I can't actually remember. What's the, I don't know if you know, the number plate for cars in the Western Cape, is it WC or WP?
No
I think
idea.
it's WP.
I have no idea.
You don't know. Okay, it's fine. It doesn't matter, but I'm just choosing a location that's distant. Okay, if I'm selling stock, okay, physical stock, we're looking at goods, okay, goods that we're going to have to move up and down. Okay, if this head office is going to be sending goods to KZN, it's going to take a few hours, okay, maybe even a few days, depending on how far we're driving. Okay, if I'm distributing goods to all these different branches, okay, across the country. If you're going to be, inverted commas, transporting the goods, i.e. goods in transit, then you can even bring in another classification. In other words, remember we said inventory at the head office is called what? Inventory to branch. Do you remember that?
Yes.
Okay, the inventory at the branch is called branch inventory. Remember that?
Yes.
Okay. When you're delivering from head office, okay, let's say it's in Gauteng, so Joburg and Pretoria. Okay, if the head office is in Joburg and you're delivering goods to Pretoria, okay, that could be half an hour. So if I'm looking at that, you would have debit branch inventory and you'd have credit inventory to branch. Does that make sense?
Yes.
Okay, because the goods go there immediately. But if it takes a long time, maybe a few days, maybe a few weeks even, depending on how fast or slow this is. Okay, maybe we're using the train and it takes a week. Maybe we're using a truck, it takes a few days. Okay, maybe we're using something else and it's quicker. Okay, if it's a plane, then you might not have this, goods in transit. But goods in transit is important, especially when there's a delay in the arrival of the goods, because can you evaluate the branch's performance based on what they don't have yet? No, you can't. Okay, remember we spoke about performance evaluation? Right, so if there are goods in transit, you have to then debit the goods in transit, so that'll be the goods on the road. Okay, so let's say it's a ship even. Okay, let's say we're taking goods from Durban to Cape Town but using a boat. Okay, if it's a ship, when the goods are on the ship, those goods don't belong to the branch, but they don't also belong to the head office. Those goods are sitting on the ship, and those goods could be there for a few weeks, maybe even a few months, depending on how far those goods have to go. Okay, so if that's the case, what do you have to do? You have to debit goods in transit because it's a working account, and then when the goods arrive, a week later, What is A going to record in their records? Debit the branch inventory, credit the goods in transit. All right, so goods in transit is just like a placeholder. Okay, it's just a working account. It's a working account to show goods that aren't sitting at the head office and that aren't sitting at the branch. Okay, it's goods that are literally somewhere on the road, okay, or on the sea, or in the air, okay, in terms of wherever it's being delivered to. Okay, does that make sense?
Yeah, so it's basically a working account that
Exactly.
will eventually be zero.
Correct. Okay, because that credit will cancel with that debit and you're left with what we saw earlier. Debit branch inventory, credit inventory.
Okay.
Okay, the last bit in terms of workings and calculations. This they always test. Right, if they do give you a question on branch inventory, the chance of this coming up is almost certain. Okay, if they don't test branches, which they probably will because they haven't really tested it before. Yes, it came up in the assignment, but it was just one question, I think, if I remember correctly. Right, so branch inventory can come up and it will generally be its own question, standalone, separate. And then you'd have to consider this. Right, when you're looking at a branch and you're considering the head office's role, right, the head office can decide on how the branch wants to account for its stock. The head office can tell the branch, you will account for stock at selling price. That's what they can say. If they say that, then the branch is going to have to provide for inventory in its T account at the actual selling price. Okay, if it's the other way around, in other words, if the head office says, okay, branch, you're going to get stock, but you're going to be accounting for that stock using the cost price, then that's a bit different. Right. In a lot of the examples that I've seen in the past, UNISA is going to give you one like this, where they're accounting for goods according to a selling price. Okay, because when you have selling price, then you have to do a calculation. Cost price plus markup equals selling price. Can you mark down stock? Yes, you can. What do I mean by markdown? Maybe the goods are damaged, the goods are old, the goods need to be thrown away. Okay, markdowns, obviously stock that has lost value. Right, if markdowns are provided, then you have to consider the cost and you have to compare it to the selling price. Okay, sometimes goods are marked down. If they're marked down, they would talk about maybe potential discounts perhaps, maybe potential write-offs perhaps, depending on what's happening. Okay, so if you're looking at the costs, you're obviously going to compare that to the selling price because remember, there's going to be a difference in the cost price and the selling price. Right, so if I'm giving goods to the branch at, let's say, selling price, and then if the head office is accounting for those goods according to, let's say, cost price, there's obviously going to be a slight discrepancy. Right, so there is going to be an adjustment account that needs to be provided for. Right, the branch adjustment account is going to provide for changes or movements in the value of that stock. Okay, that's going to be moving up and down depending on where it's going, to the branch or from the branch or to the head office or from the head office, depending on what you've got. Okay, disclosure is important. In this particular section, it's more the T accounts. Okay, so generally 9 times out of 10, UNISA will probably test something related to the T accounts. Maybe the journals, but not as popular. Okay, the journals would be very similar to the T accounts actually, because the journals would just be your workings. All right, is that okay? Does that make sense? Any questions about the theory? So far, so good.
Yes.
Okay, good. All right, let's go to the textbook and see what they've given you here. Okay, so branches. Obviously, the exercises and solutions we'll come back to later. Okay, it's in the textbook, page 174. Let's start off with basic learning outcomes and so on, just to see what they've provided you with. All right, learning outcomes stated there in the study guide, key concepts. Okay, here's a few things that I can maybe ask you to recap. Okay, what is a dependent branch?
I know it's so basically it's a business that depends on head office.
Correct, it's a separate business unit, yes. Perfect, that's a good way of describing it. Right, so part of the business, but not the business. Okay, a branch is just a location where you're buying and selling goods generally. Okay, you're not going to be doing other things from the branch. The branch isn't going to have any accountant because the branch is probably small. Okay, it could though, but again, it depends on size. It depends on the individual scenario that you've been given. Okay, so just keep it simple. Dependent branches, it's a different location. Okay, branch inventory, I think you know what that is. Inventory at the branch, that's pretty self-explanatory. Inventory to branch, explain that one. We saw it earlier.
So it's inventory that's at the head office or owned by head office.
That's going to be given to the branch, right?
The branch. Yes.
Okay, good. Right, a branch adjustment, when do we provide for adjustments?
When there's a change in the actual cost.
Okay, yes. So in other words, the write down. When looking at the branch adjustment, you could be providing for adjustment because the branch might be using maybe selling price and the head office might be using cost price, and there's a discrepancy between the two. Does that make sense?
Yes.
Okay, so you don't often have an adjustment account. It's only in certain situations. Okay, situations where they're talking about the branch and they're talking about the head office and they're talking about the movement in terms of goods from the one to the other, depending. Okay, gross profit you'll see in the calculation, profit you'll see in the calculation, and then that's just some inventory and branch. Okay, right, this is some theory. I see they've referred you to the textbook, which is good. Some reading for you to do there. The accounting we've spoken about in terms of the dependent branches. Okay, we know dependent branches will have their own accounting. Do you agree?
Yes.
Okay, you have to record it separately and then it's consolidated later on. Right, recording transactions where inventory is sent to the branch. Okay, there we go. They've given you a few examples here. All right, let's see if they've given you some workings for it. No, they haven't. Okay, recording transactions where inventory is sent to the branch is invoiced at selling price. Okay, if it's invoiced at selling price, you're just going to record it as is. Right, so in other words, what are we sending to the branch and how much is the selling price? I don't need to do any cost price calculation. Right, the cost price calculation will only be necessary if I'm going to be looking at the cost of that particular item, okay, based on its selling price perhaps. Okay, right, a few other theory notes there, a few other references there, and then you've got some notes here regarding theory. Okay, let's just do one or two of them. Let's do the last one. Generally, the last one's the most difficult. All right, if you look at D, the last one. Okay, D. Palser, obviously public company, sells inventory to its customers at an additional 20% markup. Do you see that? That's important. Yes. Okay, what is that representing?
The 20%, the markup.
Yeah, what does it represent? It represents the cost plus markup gives you the
selling.
The selling, yes, good.
Yeah.
Okay, so the selling price is what the branch would be accounting for. Does that make sense?
Yes.
Okay, and then they said here, how much will the customer pay for watercolor with the cost of that if they bought it from the branch? Okay, so obviously, if we're working out the profits, if we're working out how much they paid, okay, how much would they have paid? They would have paid the selling price. Does that make sense?
Yes.
Okay, so cost price plus selling price. Oh, no, not plus selling price. Cost price plus the markup equals the selling price.
Yes.
Got that?
Yes. Yes.
Hey. All right, more theory here. Let's just talk about the journal entry. More theory, lots of theory. Okay, talking about inventory, credit sales. Okay, that looks like it. Yeah, perfect. All right, now we've got exercises and solutions. Okay, have a look. Required, branch inventory account, inventory to branch. I'm going to call this a separate page. Let's call it study unit 8. Branches. Lots and lots and lots of T accounts. This is actually a nice way of doing it because they're covering T accounts here first, and then they're covering the cash flow at the end, which is the hardest section. Okay, cash flow requires lots of these things. Okay, what accounts do they want? What is the first account?
I want branch inventory account.
What else?
Second, inventory to branch account. And then branch trade receivables.
Okay, branch trade receivables, branch debtors. Anything else? Was there another one?
Branch expense account and bank. So 2 more.
Okay, perfect. There's always easy marks in every question. If there are opening balances, you do need to insert them. Okay, what do we have here? Exercise 8.1. Inventory is invoiced to the branch at cost. Notice, at cost. What does that mean?
We're going to use cost price.
No markup.
Okay.
Okay, so I'm not going to have to provide for the markup in this question. Does that make sense?
Yes.
Okay, cost price is the easier of the two. I doubt cost price will come up in the exam. Okay, generally, selling price is tested. Why? Because it's more difficult. Okay, you've actually got to bring in a markup. You've got to calculate the markup. Sometimes you've even got to apply the markup, depending on what you've given. Okay, so the following information pertains to the head office and branch of Boom CC for the year ended. Okay, they tell you that inventory was sent to the branch. Okay, what month am I looking at?
December.
Okay, yes, end of the financial year, right? 31st December. Okay, so did this happen during the year?
Yes.
It could have happened during the year because they've recorded it already. Okay, so what should they have recorded? Inventory sent to branch, 4,800. What do you debit, what do you credit?
Would this not be a balancing figure?
A balancing figure? Why do you say it? Wouldn't it be a balancing figure? It wouldn't be. Why?
So
Why do you say balancing?
So is this not the amount that they sent over the year to the branch from head office?
Let's see. The information pertains to the head office
For the
and
year.
the branch. Yeah, it is. It's the inventory that was sent. So it's going to be what? Debit, credit? Go back to the notes. Which one?
Okay, so I would debit inventory at the branch, and I would credit inventory sent to the branch.
Correct. What do we call those accounts? Use the ones they've given you. Branch inventory. Would you use that account?
So I would branch inventory, yes.
Okay, what would you do to that account?
So I would debit branch inventory, and I would write inventory sent to branch 4,800.
Correct. Can you have a debit without a credit?
No. So inventory to branch 4,800 branch inventory.
Good. Okay, so see, you're creating this account to account for inventory that's no longer at the head office.
Okay.
Happy with that one?
Yes.
Okay, what's next? Let me shrink this actually so we can see the question as well.
Okay, the next one is inventory returned to head office by the branch. So I would debit inventory that's at the branch. What is it? Inventory to branch. I would debit.
Okay, debit inventory to branch, correct. Why? It's decreasing. Do you agree? No, not
Yes.
decreasing, increasing.
It's
coming
increasing.
back from the branch.
The branch is decreasing.
Correct. The branch is decreasing. That's right. I agree.
And that's 80 Rand.
Okay, what's the next bit? What does the question say now?
The next one says sales by branch for the year. Cash. So for cash, I would debit bank with branch inventory. So so my
Okay, you're using the notes correctly. Well done. Okay, remember we
I
said
just don't know how to
any
describe it.
sale. Sorry, yeah?
Do you know? Okay, I don't know what's the word. So I know under the bank account, I would debit it, but what word do I use? Do I just say branch inventory?
Yes, you can put a date if you want to. It'll be the last day of the year because we don't have any
Okay,
other dates.
okay,
You can put a journal entry if you want to, but then that's just a general journal.
okay,
Okay, so if it's a general journal entry, you would have debit to the one account, you would credit to the other account.
okay,
Okay, I haven't really seen them ask for journals in this section. They do like their T account, so if this section does come up, it's probably going to be either theory, multiple choice, okay, short questions, or long question calculation looking at branch inventory and other considerations.
okay.
Okay, so what did you say you're going to do here? Is branch inventory going
Bank,
up or down? Remember, you're accounting for the movement in stock.
it's going down.
Good, so debit or credit?
Credit,
Why?
bank, because it's going down. You
Yes, it's a
like
decrease because you've
sold it,
received sales, or you've made
money.
sales, I should
Yeah,
say.
yes,
Okay, good, well done. All right, so remember we said we don't record sales as sales. You decrease the branch inventory because of the sales. Does that make sense?
yes. I remember that.
Okay, that is the cash sales. That's how you account for it. That's why you have that in the notes. Okay, in the notes, we said we don't account for sales separate for the branch. Okay, sales are sales. The branch just provides for the movement in the stock. Okay, how much
Okay.
was it? You've got cash and you've got credit here. Do you see that?
Yes.
Okay, so you actually need two. Can I combine them? You could if you wanted to, but you would have a different description because obviously credit sales would be with your debtors. Does that make sense?
Yes.
Okay. All right. Because I've got bank here, let me put in the amount first, and then let me reference that amount. Okay, so 2,000 goes there. Can you have a debit? Can you have a credit without a debit?
No. So
No.
debit
So
bank.
in the branch, the bank. Okay, what's happening next? The debtors. You agree?
Uh, yes. So
Okay, so
debit
copy paste.
trade receipt.
Sorry, say that again.
I just went from the beginning. Debit trade receivables and a credit bank inventory.
No. Why are you crediting bank?
I mean, sorry, branch inventory.
Branch inventory, yes. Okay, but this is for credit now. So what will you
Yes.
credit? Branch inventory is right. What would you debit?
Trade receivables.
Which one? For the branch or for the head office?
Branch.
Yes. Okay, the branch inventory that is sold needs to be provided for using the branch debtors because those are customers that have to pay you. Does that make sense?
Yes.
Okay, branch debtors, how much was it? 3290. Okay, did I have the other debit here? Did I have the other debit here? I don't think so. Did I leave out the bank here? Yeah, I did. No, I didn't. It is there.
Oh,
It's fine.
yes.
Okay, I thought I forgot it.
Okay.
It's there. Okay, next one. What does the next one say? What does the next one deal with?
So cash received from branch debtors and paid into the head office bank account. So I would debit bank account and I would credit branch trade receivables.
Why? Asset increase?
Because,
Asset decrease. Do you agree?
yes, so
Yeah,
trade
so
receivables, yeah.
yeah, so it's like your normal trade receivables. What you're saying is perfect. Okay, debit bank, obviously money coming in, asset increase, and then
Yes,
obviously decrease the debtor. What debtor are you decreasing? Here,
the branch,
the branch debtor, exactly.
yes. So it's just the wording.
Exactly. That's why it's so easy. This section is very easy. The only thing that's new and different is that cost price markup selling price thing that we're getting to. Okay. I don't
Okay,
think an activity like this will come up in an exam because it's so easy. Because it's literally basic accounting, but just with different names. That's all.
okay.
Okay, as long as you understood that theory that we went over in the notes, look how good you're doing here. You're getting it all right because you understand that the vocab has changed, but the basics stay the same. Okay, happy so far?
Yes,
All right, so you've got that. What was the other thing you said? Credit. You gave me the credit debit what?
bank.
Yes. Same thing. Branch inventory. No debtors. This was a receipt from a debtor. Okay, this wasn't a sale. This was 2890. Here you are. Okay, happy with that?
Yes.
Good. The
Next,
last one. Sundry
expenses
expenses?
paid by head office. So I would debit branch expenses and I
Good.
would credit bank. There we go.
Correct.
600.
See, okay, it's like any other expense, but you need to identify it because you need to know which branches are incurring these expenses. Because remember, coming back to what we said earlier, you're probably going to want to manage the performance at each branch, right?
Yes.
And the only way we can do that is by keeping track of every single branch. Okay, so be careful. Just because you only have branch inventory here doesn't mean this is multiple branches. It's one branch. This could be branch inventory for A, and then you could have branch inventory for B and branch inventory for C. Okay, so every single branch has to have its own account. That's what I was trying to mention earlier in terms of the separate accounting, but still belonging to one business. Does that make sense?
Yes.
Okay, good. All right, so okay, you said debit this. What is the amount? 600, hey?
Yes.
And then you said credit this. Good. Okay, now you've got a few adjustments in terms of additional information, things that you also have to provide for. Right, so you've done the easy bits. Okay, here's the challenging bit, but it's not that bad. Okay, if you look at it, number one, what do you see here? What's happening here? Do you know? Do I
So
need
as
to do
we
anything with
said,
this?
no.
No, I don't. Okay, this is just re-emphasizing the point that they're using cost price, not selling price. Do you agree?
Yes.
Okay, point number two, do I need that?
Yes.
Why?
Because our branch trade receivables will decrease.
Branch trade receivables will decrease. Good. Okay, if you
They
read
would
this one, this is looking at a write-off of bad debt. Do you agree?
Yes.
Okay, so how do you process a normal bad debt? Debit bad debt, credit, debtors. Do you
Trade
agree?
receivables. Yes.
Okay, change the name. So you said branch debtor. That's correct. Where's branch debtors? Here. Branch trade receivables, right?
Yes.
Okay, let's put the amount in. What was it? 50, hey?
Yes.
Okay, let me ask you this. What do you think the contra account is going to be? Do we have a debtors not debtors. Do you have a bad debt account with the branch?
I would think so.
You could create a bad debt account for the branch, but if you have a bad debt, what or how does the branch view the bad debt as? What is bad debt in other words?
So, okay, so would you credit?
You
No,
are, you are going to credit the branch trade receivable. That's fine. Okay, there's nothing wrong
yes.
with this. That I'm happy with. But now the
Yes.
question is, which accounts do I debit here? Which accounts do I credit here? So you went with credit debtors. That's fine. I agree with that. But remember, you're referencing the contra account. What do you think
I
the
would
contra account
actually,
is going to be for branch trade receivables? Does a
I would
branch
actually put it,
keep track of all its individual expenses?
I would actually put it under expenses, branch expense account.
Okay, it is going to be branch expense, so that's good. Okay, because earlier we said that the branch needs to account for its expenses. Right, this is
Yes.
an expense, but it relates to who? The branch. Does that make sense?
Yes. Yes.
Okay,
I get what
so
you're saying.
you could have shown this as bad debt or credit losses, but that's only if the head office wanted to classify this for the entire business, right? If they're just looking at the individual branches, okay, this bad debt that this branch would incur would be the branch's bad debt. Does that make sense?
Yes.
Okay, so if it's the branch's bad debt, not the company's bad debt, it's the branch's bad debt. That's why the branch needs to account for the expense. Happy with that?
Yes.
Good. What is it? Branch expense
Expense.
or expenses? I think it is plural. Hey, yeah. Okay, branch expenses, branch expenses. Okay, what is it? 50-50. Okay, what's next? Number 3. Tell me what's happening
Dis
here.
discount on selling prices for cash sales granted to customers amounted to 30 Rand.
What's
So
happening?
basically, you gave a discount,
Who gave the discount?
the branch.
Good. If the branch gives a discount, what are they going to show? They're going to show a smaller selling price. Do you agree?
Yes.
How are you accounting for stock here?
Cost price.
Good. So would you show anything? No, you wouldn't. Okay, remember we said when you look at a branch inventory account, you need to identify whether this is cost price or selling price. Okay, if it's cost price, they get stock, they sell stock. They get stock, they sell stock. Okay? If they sell the stock at a discount, it's going to be a discount, but it's going to be a discount against the selling price, not a discount against the cost price. Does that make sense?
So if, for argument's sake, let's just say we were working on selling price, what would our workings be for
Yeah, then you'd
this?
have to provide for the discount because it's going to create an adjustment. Okay, we're
Okay.
getting
So
there.
it
Okay,
would
remember that
be,
adjustment account? The
okay,
adjustment account basically brings this account in line with the head office.
okay,
Okay, yeah, so we don't have to worry about it here because it's a discount on selling, not a discount on cost price.
okay.
Okay, and then you've got inventory on hand. Whose inventory is this? It's not
The
very clear,
branches.
hey? Well,
But I
actually, it
would,
is. If it was branch inventory, it would be the branch. It's inventory, so it must be the head office. Do you agree?
uh, it could be both actually.
No, if it can't be both. If it was both, it would be called branch inventory. Branch inventory means inventory at the branch. Inventory just means inventory at the head office.
Okay.
Inventory to branch means inventory that we gave to the branch. Does that make sense? You've got 3
Yes,
different
it does.
accounts here.
Okay.
Okay, account number 1, Branch inventory, this is inventory at the branch. Okay, branch A sitting in Cape Town. Okay, then we've got inventory to branch. Inventory to branch is the inventory that the head office had that they sent to the branch. Does that make sense?
Yes.
And then they've got inventory at 31st December, which is the inventory still sitting at the head office. Does that make sense?
Yes.
Okay, so you've got 3 different accounts showing 3 different types of inventory. Does that make sense?
Yes.
Okay, so just be careful of the wording. That's what's going to catch you here. It's the wording, right? Because you get inventory to branch, and you get branch inventory. 3 separate T accounts.
Okay.
Let me copy paste. Let me delete that. Let me delete that. And let me put a note here. This would be the head office inventory at the head office. Okay, not inventory at the head office that was sent to the branch. If it was inventory at the head office that was sent to the branch, then it would be called inventory to branch.
Okay.
Okay. All right, so it's actually 3 separate accounts. Ooh, delete all of this stuff. I can't copy paste that. It's its own account. Okay, so inventory, that inventory there would just be the closing stock for the actual head office. Does that make sense?
Yes.
Perfect. Okay, now what? Is that it? Yeah, that's it. So now we just need to balance these accounts. Okay, so obviously, if you're looking at branch inventory, what is branch inventory showing us? What did we say earlier? Branch inventory shows what? The inventory that comes in and the inventory that goes out. Do you agree?
Yes.
What do we call the difference between in and out? If I'm looking at a branch selling stock.
Sorry, the difference between?
The difference between the goods that are coming in and going out. What would the difference be?
The difference, what came in and what went out? Are we talking about closing?
No, not closing. We're talking about gross profits. We're talking about the difference between your sales and your cost of sales. So what's coming in and what's going out.
Oh, okay.
Okay,
Yes.
so if that came in and that went out, okay, and some of it was returned, surely the difference is your gross profit. Does that make sense?
Yes.
Okay, so if you had to balance this account off, what are you going to have? You're going to have, let's see, which side's bigger? This side looks bigger. No, this side looks bigger. 2 and 3 is 5. 5 is bigger than 4. Does that make sense?
Yes.
Okay, so if I had to balance this account off, what you get here is going to be the gross profit. Okay, they don't call it gross profit. This is something that would be taken into consideration when the head office does their calculation for the profit or loss at the branch. Okay, so if I'm looking at the gross profit here, this gross profit would be for the branch. So the branch will have a gross profit. Do they have a profit account here? I've got bank, I've got branch expenses, and I've got receivables, and that's it. So if there's no profit account to calculate this, you'd have to offset it against your expenses to work out your net profit. Okay, so this would be the branch gross profit. Okay, that would be offset against the expenses. Okay, so because I don't have a profit account, I'm just going to offset it against the branch because they wanted me to show these accounts. Okay, you have to close this account off. And you weren't asked to draw up other accounts. I'm not going to draw up other accounts. I'm just going to close this off. So the profit here would be 570. Okay, that profit is going to go where? To the branch expense because I need to determine how much did the branch actually make in terms of operations after taking its expenses into consideration. Does that make sense? It's like profit and loss, Or let me rephrase it. It's like trading account and then profit and loss. Ooh, same color. Okay, I'm not going to change. I'll leave it as 570. Okay, let me reference it. Where did it come from? Branch inventory. Inventory. Okay, so the branch inventory account is going to show that. Okay, then I can balance this account off. Okay, if I'm looking at the branch expenses account, okay, obviously there's going to be a net profit, okay, from this account, okay, because this is like the profit and loss account. Okay, so this branch has income and expenses. Okay, so which side's bigger? This side's bigger. So if this side's bigger, then there's going to be a profit or loss. It'll actually be a profit because you're looking at the branch expenses account. Oh, it wouldn't be. The expenses are more. Other way around. Okay, this was the gross profits. Okay, same like trading account. Remember with trading account, if this was profit and loss. Okay, if this was profit and loss, let me show profit and loss actually. Okay, if this was profit and loss, then you would have had trading account here showing the gross profits. Whatever it is. Let's say 570. Let's keep the numbers the same. And then obviously you would have had expenses here. Expenses, expenses, expenses. Right, if those are the expenses, your trading account is your gross profit. The gross profit here is more than the expenses, so you would have landed up with a loss. So then you would have had a loss here, a head office expense, loss. Head office loss. And that would go to the head office's accounts. And that would be the difference. Okay, so that account is now closed. Okay, this would have gone to your capital actually, sorry. I'm writing the wrong thing in the wrong place. Okay, it's similar to profit and loss. If you had profit and loss, you would have closed this off to the capital account. Okay, if you close off this to the capital account, you're decreasing capital, so you're viewing this as a loss. Okay, so that's the head office loss. What else do I need to close off here? Okay, so I've closed that one. Okay, inventory to branch. What do we say inventory to branch is representing? We spoke about it earlier.
Inventory that's from the head office to the branch.
Correct. Okay, so in other words, inventory that the head office has that they need to account for in their accounting records. Right, so what is the head office going to do with this calculation? It's going to affect the head office's inventory. Remember, the head office will have its own inventory. Okay, the head office could also be buying and selling stock. Okay, the head office could have its own inventory and then they would have to account for the head office's profit and loss. Right, so the inventory to branch would be closed off. Obviously, there's nothing to add here. Okay, so this account would be the head office's. What color did I use for the head office? I used green. Okay, I'm going to use green here again. Okay, so this would be a head office calculation. Right, and that'll be calculated in their records, okay, for their cost of sales, assuming the head office had their own profit and loss to calculate. Okay, what else do we need to close off here? Branch trade receivables. Okay, what did we say this relates to? Who did we say this relates to?
The branch.
Good. Okay, so it belongs to the branch. It stays at the branch. Obviously, head office would look at this to see if they're managing their debtors or not. Okay, so this would just be a normal debtors account. 28, that's less, hey? 2832, so that one I can just put that on that side. Okay, the difference would be the balancing figure. Okay, what else do we have? This one I've closed. This one I haven't closed. Okay, so okay, was I given any opening balances here? No, I wasn't. Those are the only things we had. Okay, so I'm just going to have to look at it and see which side's bigger, and then assume they didn't have any cash to start with. Okay, so assume a zero opening balance. Okay, so which side's bigger? This side, definitely. Okay, and I think that was it. Okay, that's it. All right, let's check what they've given you. Okay, there, branch inventory. What do I have? Let's see. Branch inventory, 48. Inventory to branch, 80. 2,000, 3,200. Okay, why do they have the 480 here? Okay, this must have been something that they've identified as being inventory at the branch. Then they should have said this was inventory at the branch, not just inventory, because inventory could be any inventory. Inventory could be at head office, or inventory could be at the branch. So if we're going to have to change it, because I see they've put that as a closing balance, and then that obviously changes the profit. Yeah, so let me just copy paste this at the bottom. Okay, I don't want to change it because then it's going to change everything else. I'm just going to put a note here. Okay, if the balance is for the branch, if the balance for inventory is for that particular branch, then we have to use it as a, inverted commas, closing balance, because this would have been part of a stock take, potentially part of a stock take. All right, so the branch could count the stock, and the branch has seen that they've got that. Okay, the question they should have added the word branch here. They should have said branch inventory at, or they should have said inventory at the branch for the end of the year was 480. Then I would agree with that being the balance here. Okay, balance carried down, brought down. Then I would just put in 480 here and 480 there, indicating that the branch still had stock. Closing stock. Closing stock, which is the same as opening stock. Okay, and if that's the case, then I need to update my workings. Let me see. Sum up. This side is still bigger, but now it's much bigger. Okay, there we go. All right, that should be the same as what they've got. Yeah, okay, then it's the same. All right, but again, yeah, it's just the wording. I'm not happy with the wording. Okay, if they told me this was the inventory at the branch, then I would have included it. Then I would have put it as a closing stock. Then that would have been fine. Okay, then you've got to update and you've got to calculate the gross profit, which is fine. We did that. Okay, the inventory to branch. Where's my inventory to branch? Here's my inventory to branch. Okay, this one's fine. Branch trade receivables. Why don't I have 350? Oh, okay, I had 350. Forgot to reference the brought down balance. Yeah, it is right. Okay, there's 350, there's 350, same balance. Okay, what else do we have? Branch expenses. Here's my branch expenses. What do I have here? Okay, obviously mine's going to be different to theirs. Let me also update this one. Okay, copy paste. All right, so assuming the gross profit has changed, the gross profit is now 1050. Okay, this gross profit is now 1050. Okay, so if that's 1050 and that's 650, obviously the profit is on the, yeah, it's a profit now, not a loss. Okay, so then you would highlight this side instead of that side, and you would close this off to the head office. Okay, so this would be a head office. Head office, this would be a profit. Hey, yeah, 10.5. Let's work it out first. 10.50. Minus first. Minus that. Reference first, then minus. Okay, this minus that, and then you'll get that. Yeah, that's fine. Okay, that would be the head office profits. Okay, net profit actually. Okay, so yeah. Let's see, what else do you have? Okay, we've got the branch expenses. We looked at that. It's obviously because of that interpretation earlier with the profit figure, and then the bank was the last one. Hey, yeah. Okay, what did they say here? Okay, they didn't even balance it. They just said it was an extract. Okay, so obviously there could have been other things here, but there wasn't, so I just balanced it. All right, and that's it. Okay, there are some comments here. Okay, here they said the cash discount on sales of 30 will not be recorded because the cash sales of 2,000 already excludes this amount. Yeah, that's true. Okay, and the reason for that is because it's carried, it's shown according to cost price, not because you've taken it out. Okay, so again, not quite right, but it's fine. Okay, you're not going to include it. Remember, when we sold goods, okay, the cash sales would obviously be at cost price, not at selling price. There wouldn't be any discounts. Okay, the discount would only apply if you have selling price, because the selling price would be affected by the discount. Then you'd have to have an adjustment. All right, so yeah, it's fine to not include it. And then what else? That's it, eh? Okay, then you've got another exercise. All right, how many exercises do we have here? How are we doing with time? Okay, no, we're doing well. There's more than enough time. We should be able to get through all of them. Let me just see how many there are. Okay, here's another one.
I think there's 3.
Here's 3. And that's it. Okay, there's 3. Okay, so we've got 2 more to do. Let's go back up. Do you want a little break? 5-minute break, or do you want to carry on? Up to you.
We can take a 5-minute break.
Okay, yeah, let's do that before we do another question, because these ones should be a bit more difficult because you've got that selling price. Okay, this is similar to the one that you had in your assignment. If I remember correctly, I think they also gave you a selling price one, and you had to provide for a discount, or an adjustment rather, I should say. And then we'll look at that. Okay, yeah, let's take a quick little break. Let's just pause the video. Perfect. Another example, exercise 8.2. What does this one say? This one says inventory is invoiced to the branch at selling price. Okay, that's important. That we definitely need to consider. What do you have to draw up? Branch inventory, inventory to branch adjustment, and branch expenses. Was that it? Yes, that's it. Okay, so go to your Excel spreadsheet. We need tier counts. Oh, I should have labeled this actually. Exercise 8.1. Copy paste all of these tier counts. Okay, 8.2. Okay, let's just do this. Okay, so they wanted branch inventory. Do I have branch inventory? Yes, but now we need to write in selling price. That's very important. Okay, what else? Inventory to branch. Got that. Branch adjustments. And branch expenses. That's it. Okay, so no bank in this one. Delete. Okay, that's it. Those are the T accounts we need to do for exercise 8.2. All right, so first things first is obviously to look at the information at the beginning. Okay, so if you look at this, what can you tell me about this first part? What do we have here? What's your first impression?
So we have information that ended on the 31st of December for head office and
Correct?
branch.
And what is this representing? The amount that was sent to the branch?
Selling price.
Yes, where would we show that?
The inventory that was sent to the branch. So we would debit. Are you asking me for the workings?
Yes.
Oh, so we would debit branch inventory and credit inventory to branch.
Okay, good. So if you're looking at what they've given you, they're telling you that the inventory was sent to the branch and it was sent to the branch at selling price. Do you see that?
Yes.
Okay, so this total, that amount is representing the amount that was sent from head office to the branch. Happy with that?
Yes.
Okay, so where's my color coding? I just want to take the color coding, it's easier. Copy, paste. Okay, and then we had inventory to branch. Inventory to branch. Okay, so those two go together. Branch inventory is obviously at selling price. Okay, I don't know if Eunice is going to want you to split it. Normally, I split out the markup because I do calculations to show the cost price and the markup. Because if you did a cost price, for example here, this was cost price, CP. Okay, then you're showing it at cost price. Right, so I like to show the cost price separate from the markup. It's just greater or more detailed disclosure. That's how I normally do it, just to show the actual workings. I'm going to do the same thing here. You can write it as one amount, but I'm going to show it as two amounts because I want to show the splits, and we can practice working out cost price and markup. That's the mathematics. Okay, you do need some mathematics here for this one because you are going to have to work out cost price and markup. Okay, so I've got cost price. How do I work out cost price? Well, I was given the selling price. I need to know what markup we have in the question. Okay, addition information. All purchases are made by head office. All goods required by the branch are supplied at selling price, which is cost plus 50%. There's it. Okay, so when you did 1502, you had cost price, markup, and selling. This is something that I would have covered with you, but I'm giving it to you now. Okay, cost price is the base, markup is 50, selling would be 150. If I was given, this is the ratio. Okay, it's a ratio. You can apply a ratio in any scenario. Okay, so if I wanted to work out this and that, and I was given this, okay, to work out the cost price, you would take the selling price, you would multiply that by 100 and you would divide that by 100 plus markup. Okay, to get the markup, you would say selling price times markup is 50 divided by open brackets 100 plus markup, close brackets. All right, so if you do that working, what was I given?
Selling.
18,750. 18,750 times 100 divided by 150 is 12,500. Okay, the markup is 18,750 times 50 over 150. That's 6250. Do you see that?
Yes.
Okay. You can write it as one figure. It would depend. If this was a multiple choice question and they only wanted, let's say, a balance, then you could just put it in as one figure. It is generally better to show it separately because, as I said, if you look at this question, what were you using here? Cost price. Okay, so unless you're specifying cost price or selling price, it's always better to show it. Okay, so this is just how I've done it. So it should be, it's probably the same in Eunice's textbook, I guess, but they don't often show it. Sometimes they do, sometimes they don't. Okay, I hope they have, but again, it's just more detailed disclosure. Okay, this is more detailed disclosure because you're showing the cost and you're showing the markup. Because the markup doesn't pertain to the inventory. The markup pertains to the sale of that inventory. And that's a separate consideration. And that's why when you look at selling price, you always need to look at the amount coming in and the amount going out, because you could have an adjustment. And we already know there's an adjustment. They ask for a branch adjustment account. Okay, so that's the first one. Do I have it? Selling price? Yes. Do I have the working? Yes. Now I need to show it. Reference your figure. There's my working. Okay, there's my working. That's what I need to show. Okay, next. Cash sales, brackets, deposited in the bank. Okay, again, where do you show cash sales when you're selling goods at a branch?
So I would debit bank.
Good.
And credit branch inventory.
Yes. Okay, remember we said in the notes, all of the movements in the branch inventory must go through the branch inventory account. If it's in selling price, same thing applies. You need to split it. Okay, so you're right. Bank is going to show the debit because bank's going to go up. And then you're obviously going to show the percentage that was attributable to the cost price and the percentage that was attributable to the markup, because you're managing your stock based on the selling price. Okay, so that's the stock's cost, that's the stock's cost, that's the stock's markup, that's the stock's markup. Does that make sense?
Yes.
Okay, this one I'm just going to do the working in the actual answer, or yeah, in the actual T account. What is it? 17,918, eh? Okay, times.
Yes.
Where's my ratio? Here. What do I want? I want cost. So times 100 divided by 150. Okay, that's my cost price. Okay, we'll leave it as near a cent. And then obviously you do the same thing, but with 50%. Okay, and then, okay, that one I need to round off. All right, there's the cost, there's the markup. Now I've shown the sales. Happy with that one?
Yes.
Okay, what happened next? What is that representing?
Returns to head office.
Okay, so what's happening here?
So basically the branch returned inventory to head office. So head office is increasing. So I would debit inventory sent to branch, and I would credit branch inventory.
Perfect, good. Okay, so again, selling price returns to head office. They tell us this is the selling price. That's going to reduce your branch inventory, so you have to show that here. Again, because inventory is accounted for at selling price, you need to split it. Okay, because there will be a provision for the return later. Okay, so obviously inventory to branch. Okay, cost price, inventory to branch, markup. Okay, and then here, branch inventory. Cost price, and then branch inventory, markup. Okay, let's work out the amount. It was 186, so equals 186 times 100 divided by 150. Okay, 124. Okay, the branch markup is the difference or the 50% as a ratio. Okay, so yeah, there's the balance. Obviously 186 if you add the two together. That figure and that figure. Okay, does that make sense? Still with me? Still making sense?
Yes.
Okay. All right, so now that you
Yes.
have the branch inventory at selling and you've got the inventory to branch, okay, you've shown the markup, okay, and you've shown the inventory. Perfect. Okay, so now I need to go and look at the sundry expenses paid by the head office. What do I do with that?
Debit, what is it? Expenses. What is it called? Branch expenses. So
Yes,
debit branch
just expenses
expenses.
for the branch, correct?
And
And
normally we would credit bank
why? Because you're paying it, paid
because
by
you
head
pay for
office.
it. Yes.
Yeah, keep
But
it
we don't have that
simple,
account.
basics. Debit the expense, credit the bank, that's it, right? Okay, did we have to show this? Yeah, we did. Okay, branch expenses, we've got it. So you would have debited this, you're right. You would show it. This is 4760. Okay, notice no splitting out cost price markup because this isn't inventory. Okay, this is just an expense. Okay, an expense that the head office is having to pay for. Head office pays for it. Okay, what else? Next. Have I looked at everything? Yes. Okay, next. Number one, okay, we read this. This is the cost price plus markup equals selling. Happy with that. Number two, okay, what happened here? A burglary took place during the year. 55 in cash, brackets cash sales, and inventory to the value of 36, bracket selling price, was stolen. No entries have been made in the accounting records. Okay, so the branch had a robbery. What is that going to do to the branch's inventory?
Going to decrease
Why?
because it's like an outflow of inventory.
Correct. And can you disadvantage the branch if you don't provide for it? No, you can't. Okay, because remember, management is going to look at the branch's performance and they're going to decide good branch or bad branch. Does that make sense?
Yes.
Okay, so if they're a good branch, they need to highlight and record all of these happenings. Okay, so was there burglary? Yes, there was. Okay, they said that the burglary took place and 55 rand in cash, and that was for the cash sales. Okay, that 55 rand cash sales was stolen from the business. Do you see that?
Yes.
Okay, so what is that going to do to my account? Increase or decrease?
Decrease.
Good. Okay, again, because they spoke about this at selling price, they said account for the branch inventory at selling. This is obviously a theft. Okay, so the contra account would have been, let's think about this. Okay, they stole goods from the business. So if they stole goods from the business, you're definitely going to have to credit this. But what would the contra account be? Let's think. You
It
would
might be
have
an
debited
expense.
theft. Okay, theft would have been seen as an expense. So it would have been an expense that the branch would have to have taken on as a knock. So then branch expenses. Yeah, I do have branch expenses. I can use branch expenses. Okay, branch expenses cost price. Branch expenses markup. Did they give me the cost or the markup? They gave me the selling price. Yeah, cost price plus markup is selling price. Okay, so obviously I need to work out the difference here. Okay, so what is the difference? This would be 55 rand. Okay, so work out the cost. Okay, that is 55 rand is the cash sales and the inventory. Hold on. The burglary took place during the year. 55 rand in cash. Okay, this is the cash, not the inventory. And inventory to the value of 36. So, we've got two things being stolen here. Am I reading that right? What is your interpretation?
Yes.
Is it the same,
Yes.
hey?
So they stole cash and they stole inventory.
Okay, so the inventory is the 36 actually. So 36 times 50 divided by 150 is 12 for the cost price. Okay, cost price is 100. That seems too low. Cost price is 24. Cost price, yeah, that seems a bit better because the cost plus the markup, right? Okay, and then the markup, copy paste that, should be the 50. Because I've got 100 plus 50 is 150. Okay, yeah, that looks right. Okay, 50% of 24 is 12. That looks right. 36 is the total. Okay, let me read this again. A burglary took place and cash was stolen. Okay, so if cash was stolen, this was cash sales, eh? The cash sales. 55 Rand in cash, but it's cash sales. Okay, so if it's cash sales, you're affecting bank because obviously this is money that's stolen. So you're taking money away from the branch, okay, because the branch has sold goods. This was a sale that they had provided for. What else did they say? They said no entries have been made in the records. Okay, so if no entries were made in the accounting records, they would have to capture this. So let's see. If we've got 55 Rand in cash, 55 Rand in cash, so bank would have to be affected. Yeah, bank in cash. To me, this would be bank in cash, not bank in cash, bank, and then branch inventory. Am I losing any stock? No, I'm losing cash from the till. So where's my bank account? I want to draw up the bank account actually. You weren't asked to draw it up, but I want to draw it up as well. Okay, bank. Let's show the bank as well, and we can see what's happening here. Okay, so where's bank here? Okay, inventory. Oh, here's bank. There, head office. Okay, so this would have been branch expenses. Okay, and then you had bank cost price, bank markup. This total, what is the total? 17,918. Okay, we saw that earlier. Oh yeah, it was that figure there, the cash sales. They said it was deposited in the bank. Okay, so bank would have had branch inventory. Okay, the cost price and the markup. The cost price is that figure. The markup is that figure. Okay, the total obviously gives you the 17,918. Okay, perfect. Okay, so now let's read it again. Okay, they say the burglary took place during the year and 55 Rand in cash, and then brackets they tell you this is cash sales. So that means you lost 55 Rand in cash sales. Okay, so the bank lost 55 Rand, but then you need to provide for the separate loss, as this will be theft of cash, but is this for the branch? Yeah, it is for the branch. Okay, so if it's for the branch, you can't do this. You can't credit, because then I would have debited this. I would have debited loss of cash.
Aren't you debit
for the
expense,
business.
branch expense?
Yeah, that's what I'm saying. I'm saying you can't do this because this isn't for the business, it's for the branch. So if it's for the branch doesn't record their expenses separate. So then this needs to be for the branch expenses. Yeah, I would agree with you. Yeah. Okay, because it's theft from the branch's point of view. It's not theft from the company's point of view. So you would have to credit the bank and debit the branch expenses. Because if I'm debiting the branch expenses, am I showing the loss? Yes, I would.
Yes.
Okay, because I would show the expense, because the expense would be the loss of cash that you would have incurred. Does that make sense?
Yes.
Okay, so bank asterisk cash lost or stolen. Let's write cash lost, or let's just say cash theft, or theft of cash. I don't think that's right. Theft of cash. Okay, so how much was it? 55. Okay, so 55 cash came out of the bank, and that would have affected the branch expenses. Good. Okay, so did we have that? Yeah, we do. We do need to show it. Okay, so bank here. Theft of cash. How much? 55. Okay, is that all right?
Yes.
Okay, did I cover everything? Let's just double check. Yes. Okay, 55 cash stolen. I've got the theft. Maybe let me highlight that. And did I look at the inventory? Yes. Okay, that I looked at first actually. Where was my stock? Where was it? Here, this bit. Okay, but I didn't provide for the other half. I've got half of it. I don't have the other half. Okay, my other half needs to go to branch expenses. Did I have it here? No, I didn't. Okay, so branch inventory. Okay, this is the cash, the costs and the markup. Okay, so every debit has to have a credit. There's my debit. There's my credit. I've got both. Okay, perfect. Now I've covered everything. What color was that? Okay, that was pink. All right, next, number 3. Okay, they say the net proceeds of the annual sales amount to 360. Okay, that's net proceeds. Okay, net proceeds means after they've taken something out. Okay, inventory was sold at selling price less a 10% discount. Okay, okay, the discount now, because we're looking at selling price, I have to provide for the discount. Okay, so that's important to note. What else do they say? No entries were made in the records concerning this price reduction. Okay, that's important. You can see here, they're telling you that no entries were made. So if no entries were made, the cash sales, in other words, this amount, the cash sales here would be too high or too low. It would be too high because I didn't take the discount into consideration. Does that make sense?
Yes.
Okay, so if this is too high, where's the other half of it here? I need to provide for the difference. Okay, so 10% was the net. Okay, so I need to do maths again now. Okay, so gross sales less discount equals net sales. Okay, if the gross sales was 100 and I minus the discount of 10, I would have got net sales of 90. What were my net sales here? 360. Okay, that's the ratio. This is just mathematics. Okay, I was given how much? I was given 360. Okay, so what were my gross sales? That's what I want. Okay, so formula-wise, 360 times 100 divided by 90 gives you 400. Okay, 400 would have been the gross sales. The discount would have been 10%, which would have been 40. The net amount would have been 360. That's correct. Okay, so 10% of 400 is 40. 40 minus 40 is 360. Okay, does that make sense?
Yes.
Okay, what did they say here? They said no entries were made in the accounting records. All right, so if no entries were made in the accounting records, did I record too much or did I record too little? That's the big question. Okay, so if the net amount was 360, what should I have recorded? I should have recorded 40. Does that make sense? The discount. Because I didn't record the discount. Does that make sense?
Yes.
Okay, they tell me, they said no entries had been made. They tell you that the net, okay, let me just highlight this just so we've got it, and let me go back. Okay, they tell you that the net proceeds, okay, of the annual sales amounted to 360. Fine. Okay, that I know is the net. I've got the net. Okay, I had to do mathematics here to get the gross. Okay, the inventory was sold at selling price less 10%. That's fine. Okay, so if I go back up, when I gave stock to the branch, I gave them stock at selling price. Does that make sense?
Yes.
Okay, when they sold the stock, they sold it at a discount. So if I'm looking at this amount would have been too low. Do you agree? Because I only would have taken out 360 instead of 400. Does that make sense?
Yes.
Okay, so if I gave them stock that was worth 400 and they sold that stock at 360, there's a missing 40 that I'm going to assume that they stole. But did they steal it? No, they didn't steal it because they gave a discount. So I need to provide for the discount. The discount is going to be an adjustment that you'd have to provide for. Here's the adjustment. Okay, so different color. Let's make this nice and bright. Okay, this is a branch adjustment because this is for the discounts that you had not provided initially because you gave them stock at selling and they sold it at a discount which was 360. There's a missing 40. I need to balance this account, otherwise there's missing inventory. Okay, so reference it was 40 here, yeah. Okay, there's the 40. The gross was 400, the net was 360. I gave them 400, they sold for 360. 40 will be an adjustment. Okay, does that make sense? That's a bit complicated. That's difficult.
I mean, the theory makes sense.
Okay, good.
I get what you said.
Yeah, if you understand the theory, you've got it. Okay, remember, everything that's accounted for here is at selling price. So when they get goods, the goods come in at 400. When the goods went out at 360. The goods should have gone out at 400. Does that make sense?
Yes.
That's why you're providing for the adjustments. Okay, so I've got my first adjustment here. Let's go paste that here. Obviously, it relates to the discount. I've referenced it in the branch inventory. Okay, branch inventory is representing the discount. And I referenced the 40. Okay, equals, there's my credit. Every debit has a credit. That debit has a credit. Happy, good. Next. Okay, what's next? Let's highlight it. Okay, inventory invoiced to the branch at 75 included in the amount of 1875. Okay, what is the 1875? Inventory sent to the branch. Okay, fine. Okay, it's this amount. Inventory sent to the branch. Okay, so now I know that this was inventory sent to the branch and they said that 75 was included. Fine. Was still in transit. Okay, here's that note about goods in transit. And was therefore not included in the branch's inventory. Okay, so if I have 75 Rand worth of stock that I have actually given to the branch, but it's in transit, do you agree that that needs to be classified as a separate account? Let me draw up another one.
Yes.
Okay, this is called goods in transit. Okay, the goods in transit is obviously seen as an asset. Assets are debited. So I am going to have a debit there. Okay, and the debit there is going to represent the credit against the branch inventory. Okay, we saw this in the notes even. I had a note about the debit and credit. I remember showing it to you. Let me go back. Is it still open? Yeah, it's still open. Here, this is the right one. Here. There we go. Okay, so what do I have? I have goods still in transit. So am I creating goods in transit? Yes, I am. Debit goods in transit, credit inventory to the branch. Okay, so Inventory invoiced to the branch at 75. So inventory invoiced to the branch at 75. So part of this was still in transit at 31st December. Okay, so part of this total, this 18,750. Okay, that 18,750 has 75 Rand that shouldn't have been there. It should have been goods in transit. So it needs to come out. Does that make sense?
Yes.
Okay, let's take it out. Okay, I wrote the goods in transit earlier. So it's going to be different actually to this one. Okay, the reason why I have I have inventory to the branch is because this inventory is being sent to the branch. Does that make sense?
Yes.
Okay, and that's why you're showing it. Here they didn't show that. They omitted it. They should have shown this, but they didn't because the goods didn't arrive yet. That's why they're taking it out of this thing. Okay, quite a complex question. All right, so double check. Inventory invoice to the branch was included in that figure. Okay, it's in that figure. Take it out. Yeah, it is right. I have to put it in. Okay, I just want to double check. So I'm just checking my logic. All right, branch. Ooh. Branch. No, not branch. I've got branch inventory. Other one. Goods in transit. That's the one. Goods in transit. Okay, so I'm taking it out. I've got my credits. How much am I taking out? 75. Okay, I should actually split this actually because this is at selling price. Because they said everything is at selling. So I'm going to do it again. Copy paste. This would be cost price. That would be markup. Okay, so 75 times, what is it? 100, yeah. 100 divided by 150. Okay, and then obviously, okay, that's 75, so it's just that minus 75. 75 minus that. Okay, the difference. All right, so that's the portion that will be sitting here in the goods in transit. Okay, what is it? 50 and 25. Okay, happy with that? Does that make sense?
Yes.
Okay, last bit. Point number 5 says inventory at selling price. Okay, I know this is at selling price. They tell me what I had at the beginning and they tell me what I had at the end. Okay, be careful with this one though. I see they don't like writing what this is for. Let me go see what they said here. Okay, maybe it's actually fine. They don't have to specify that's branch inventory. Because at the top here they say the following information pertains to the head office O and the branch. Okay, so it actually relates to both the head office and the branch. Okay, but because they didn't write branch inventory in the previous one, remember we looked at this one? They
Yes.
just wrote inventory, they didn't write branch inventory. I assume this is branch inventory because they haven't specified. It's probably the same case. Does that make sense?
Yes.
Okay, I mean, we can check it quickly and see. Here, branch inventory, yeah, it is there. See? 1,500. What else do they have? Here, closing, 1950, yeah. Okay, so if I confirm it with the answer, okay, they do want you to consider this as branch inventory. I would have liked to have seen the word branch inventory there or inventory at the branch. That would be a bit more specific, but it's fine. Okay, we now know from question 1 that they're doing that. Okay, so I'm going to have to add a line here because I didn't put in the balance. Okay, I need to show a balance. Balance brought down. Obviously, beginning of the month. Beginning of the month would have been end of the previous. Okay, this is for the year. So beginning of the year, end of the year. Okay, so this balance is 1,500. Okay, is that all right?
Yes.
Okay, we need to add more lines here as well because we have balances. Ooh. Why did it make that funny line? Okay, doesn't matter. I'm going to keep it there. Balance. Carried down, brought down. Balance. Carried down, brought down. Okay, so what is the balance? It was 1950, yeah. Okay, so there's the closing stock. given in the question. Okay, and that's it. That was all they gave you in the question. Happy with that?
Yeah.
Okay, so now we need to go and we need to do totaling and adjusting. Okay, so if I'm looking at branch inventory, I need to see which side's bigger. Which side looks bigger? Okay, let's just put a total there. I get 20, 20, and this one, I get 20, 25. Okay, so 20, 25, and what is this one? 20, 20, 205. This one is 20, 250. Okay, so 20, 250. Ooh, I'm not seeing which side's bigger. They're very similar. Okay, there's the total for the one. Ooh, yeah, it's right. Okay, I thought I was writing on the wrong line. And then the sum up. Here's the total for the other. Okay, which side looks bigger? This side looks bigger.
They're the same. No, yeah, that's what it is.
They're very
50,
similar.
right?
Just they're 150 out. No, 145 out. No,
No,
45
isn't
out.
it just 50?
45.
45.
Yeah, it looks like 45. Okay, if the math is right. Okay, so we need to provide for the difference. So that needs to be inserts. Okay, that's the bigger total. That goes on this side. Okay, then we need to work out the balance. Okay, this balance would be the markup, or the same as before. Let me use the same text as before. Branch inventory here, copy paste. Okay. Right, so this is the gross profit figure that you'd have to offset, okay, against your branch expenses or the branch adjustment account, either or, because you've got both here. You've got branch adjustment and you've got branch expenses. Okay, this branch adjustment account is used to calculate changes in the actual account for the branch. Okay, so the branch is going to account for their expenses, and the branch will also have to account for adjustments. Okay, remember, adjustments are for things that affect the branch's T accounts. Okay, their workings in the actual inventory account. Okay, so when there are things like this, okay, the inventory account has, this would be a credit, so this would have a debit. Okay, so the balancing figure here is equal to this minus the sum of all of that. There, 45, yeah. Okay. Get rid of the decimals. All right, so that's 45. Branch adjustment, 45. Branch inventory. Okay, let's summarize the inventory to branch. Okay, the inventory to branch, which side looks bigger here?
Credit.
Yes, okay, definitely. Okay, so you can see that's the bigger side. All right, so again, inventory to branch, this is going to be used for, because this is inventory to the branch, inventory to the branch is for the head office. So let me use the same description as what I had earlier, head office calculation. Okay, the net amount, that was the net amount, inventory to branch. Okay, inventory to branch had an amount of 18,564, which is inventory that's still going to be provided for, okay, for the actual head office. Okay, the head office needs to account for that portion as part of their calculation. Okay, we've got branch adjustment and we've got branch expenses. This one you can't really balance because there is no, you could offset it. So if I'm looking at the branch adjustment account, Obviously, this will all land up in one account. So if I work out which is bigger here, obviously, what is that? 85, yeah. 85. And then the branch adjustment would be referenced in the branch expenses. Okay, so I've got 85. Okay, 85. And I've got 85. Branch adjustments. All right, then I just need to add up. Okay, so branch expenses, I can just sum up. Okay. What else did I have? Okay, this you can balance if you want to. There weren't any balances here, so you probably don't have to. Okay, I'm not going to balance this one because in that other example, you didn't have to balance it. And I don't think they even asked for it in this one. What did they want here? Branch inventory, inventory to branch adjustment, branch expenses. Yeah, so you don't have to balance this one. And then the goods in transit, that'll obviously stay as is. Okay, that one has to stay 75. Okay, that's the balance for that one. Balance brought down, carried down. 75 sitting in, goods in transit. That would be the balance basically. Okay, let's have a look and see. All right, so, okay, here, branch inventory. This was all at selling. Where's my branch inventory here? Okay, let me shrink this a bit that we can see more. Okay, hopefully we can see all of that there. All right, so 1, 5, 12 and a half, 6 and a half. Okay, they've got a 10 here. What is this 10 for? Branch inventory surplus. Okay, we'll have to double check that and see. You've got the sales. Okay, they've shown one amount. I've shown two. Double check. 17918, that's correct. I agree. Okay, inventory to branch was the 124. Okay, the inventory branch markup was 62. They've got the returns, they've got the markup. Good. Okay, here they've shown it separately. That's fine. Okay, then they've got the cash that was stolen, the 55. Where's my 55? Did I show 55? No, I didn't. What did I show it as? I showed it as branch expenses because that came out of the cash. I showed it here. Where was it? Here, the 55. Did I have the other side of it? Yeah, I did. Okay. All right. So here I used bank to show the actual cash that was stolen. I see they've included it here as a debit against the branch expenses. So they went with debit branch expenses and they went credit branch inventory. All right. Why would you do that? Let's think about it. It's cash that they've stolen. Why would you increase your sales? Because if you're showing, so branch inventory here is for inventory that's in the business. It's not cash. Cash is stored in the bank. They're saying that they're crediting here. So if I'm crediting branch expenses, they're saying I should reduce the inventory by 55. That I don't agree with. Okay, because they didn't steal inventory. They stole cash. Isn't that what the question said?
Yes.
Yeah, the burglary took place during the year and 55 in cash. If this was stock, then I would take it out of branch inventory. Maybe that's the assumption. Inventory at 30. Okay, let's see what they did with this. Okay, they stole inventory. When you steal inventory, that you have to take out. Did they take that out? Let's see. Okay, here, branch expenses, inventory stolen, 24, branch adjustment, markup. Okay, that was on the inventory. That's the 12. Branch expenses 24, branch expenses markup 12. Yes, that's fine. I agree with that. Okay, so the only thing I don't agree with is this, the 55. Let me put a little note here. Okay, that's fine. I'll remember. Okay, let's see if that changes the balance. Okay, next. The 40 we've got, the discount, we spoke about that, that's fine. The balance of inventory that we took out, I took that out, that's fine. And then you've got the goods in transit, which we did take out, that's fine. Okay, yeah, so the only difference here is this branch expenses, which is the stock that's stolen. Okay, I can see, if you look at this, have a look at their branch adjustment. They've got 10 here, and then they've got branch expenses, cash stolen, they've got 55 there. Notice 55 minus 10 is 45. Do you see that?
Yes.
Okay, and that's the 45 that we've got there, because this was for the branch gross profit, which was the balance that we had taken through to the account. So they took 55 to expenses and they took 10 to the adjustment. Right, so I think they've taken more to the adjustment. Everywhere where I've got branch expenses markup, they've put that into the adjustment instead of putting it into branch expenses. That's what they've done. Okay, so let me just show that. Okay, if we take all the markup, I'm just going to copy paste this. Ooh, I'm going to have to reference all the figures as well. Actually, I don't have to. Undo. Let's do that again. Undo. Okay, let's copy paste the values. All right, do I have that selected? Yes. Okay, so this one will need to change. Well, slightly, I just want to see if it does make a difference. I pasted it again. Paste values. Okay, undo. Is it selected? Yeah, let's try that again. There we go. Okay, and then we need to copy the formatting. Okay, so we've got branch inventory here. Okay, so they want us to take all of those markups to the branch adjustment. Okay, let me show that as well. Okay, so I'm going to copy paste this, paste values, and then let's just do it what they're indicating here in terms of the format painter. Okay, all right, so they want us to take all of these markup figures. So wherever I've got markup, okay, they want us to take that to the branch adjustment account. Okay, because the branch adjustment, let's have a look at their branch adjustment. Inventory to branch, inventory to branch. There's my inventory to branch. Yeah, see, same thing here. They haven't taken the markup. They only show the costs. Okay, so looking at their answer, it looks like their branch adjustment is only focusing on the markup portion. So in other words, anything that affects the selling price. Okay, that's basically split. So basically the markup portion. I think that's fine. Okay, did they highlight that? Okay, yeah, they did. See, the branch adjustment in brackets, markup at 50%. All right, so they've chosen to show all the markup amounts as part of a separate calculation in the branch adjustment account, because this account is now showing all the markup, and that's it. They're not showing anything else. Okay, which I find strange, because they said this is looking at selling price. If it's selling price, you would have to show the cost and the markup. All right, let me have a look at the textbook and see, because I remember doing it this way, where you have to split it. Let's just check the textbook as well, just to make sure. There, branches, page 365. Let's just see what you should show in branch adjustments. Okay, do you have to always show the markup, or is it only for those adjustments when you have a discount? Let's confirm. Okay, this is on page 360. Yeah, I've got it. Okay, here. Okay, 365 theory. Okay, I'm looking for branch adjustments. Okay, branch inventory, debtors, all of that's fine. That's the first part of the textbook. Here, they talk about the discounts. The discount, okay, in the textbook, they even show the discount separate. Settlement discount for a debtor. Okay, here, inventory marked down. Cash embezzled or stolen. Here, branch inventory, branch debtors, bank. Okay, branch expenses, that's fine. See, when you have stolen cash goes to the branch expenses account, according to the textbook example. That's fine. That's how we've done it. Okay, branch expenses here. Okay, still fine. Branch inventory in transit, goods in transit. Here, branch inventory again. I'm looking for the adjustment accounts. Branch expense. See, the textbook tends to use branch expenses for all those posts, those amounts that were taken or amounts that were included. I don't see branch adjustment here in the textbook. Let's keep paging through. Inventory, settlement discount, markup. Okay, here. All right, on page, okay, there is an example here in the textbook. This example looks at, you probably have the same one in your textbook, example 9.1, inventory sent to the branch, and here they've got selling price. Okay, so, branch adjustment for Omega in brackets, okay, yeah, markup at cost, 25%. Okay, looks like they are processing everything to that one account. Okay, so I do need to correct my working. Yeah, looks like that is what they're doing, even in the textbook. Okay, markup on cost, I see. Branch adjustment here, page 388, same thing. They've always used the markup. Let's see these other examples. Yeah, 25% here, markup. Anything else? Let's see. Okay, there's another example. Do they use the same percentage? Yeah, okay, fine. All right, so yeah, this is something we can maybe amend and change. Okay, so let's put a note here. NB, branch adjustments used to account for the markup only. Okay, the net effect should still be the same, but they want us to provide for it separately. Okay, so if we update the solution, let's see. Okay, this is what we had. Okay, so anything that relates to the markup needs to go to the adjustment account. Okay, so notice here I have something for markup. Do you see that?
Yeah.
This is going to go to branch adjustments. All right, so this needs to be moved to the branch adjustment account. The branch adjustment account is going to have to show the markup of 6,250. Okay, because 6,250 is the amount that I have as part of the inventory that I had given to the actual branch. Okay, so markup needs to go. Delete that. Okay, let's see. Branch adjustment, do they have that there? Yeah, that is there. Okay. Here you've got branch adjustment, markup on deliveries. Yeah, you see, this is still, it's not providing for the total. That's the problem. Okay, because the selling price has to be the total. So you do have to keep that there. You can't take that out. Okay, even they've shown it. You can't take it out because it's at selling price. You have to show it at selling price. You can't not show it at selling price. Okay, remember branch inventory is accounted for at selling price. I can't just take out the inventory markup. I can't just take that out. Okay, but they want you to recognize it separately in the branch adjustment account, which is what they want you to provide for. Okay, so if you look at this, see, they've got it here as well. Branch inventory markup on deliveries, 6,250. All right, they're providing for this here as well. Okay, the branch adjustment account, because I'm taking out all of the markup, let's show it then. What is the amount? 6,250. Okay, let's highlight that. Let's put that as, this is the branch inventory. Okay, branch inventory, I'm just going to put a note here, 50% markup. on...
But why do they want us to take out the markup?
Yeah, we're not taking it out. We're showing it as a separate consideration. Okay, because remember, this is at selling price. If it's at selling price, it must be the total. Okay, I'm not deleting it. I'm keeping that because you can't take it out. If you take it out, then you're showing cost price, not markup. Okay, because branch inventory is at selling price, you have to show it as the total. Okay, this looks like additional disclosure specifically for the adjustment account. Okay, so if I'm looking at disclosure for the adjustment is only showing the markup. Okay, that line is important, and the markup here is 50% markup. Okay, so if I have markup, okay, because I have inventory at selling price, okay, that inventory has a markup of 50%. That markup needs to be recorded there because that's the 6,250, which relates to this portion. Okay, you have a balance here, which is 1,500. Again, you could have split it. I didn't split it, but you could have split it. They've just shown the selling price. Okay, they want us to account for the markup separately. So this markup is the markup on the actual inventory that was sent to the branch. This markup is markup on the balance that you started with. So branch inventory, again, we need another line item. Okay, delete. This is going to be 1,500 times 50 over 150. Okay, that gives me how much? That gives me 500. Okay, that's where they're getting that figure from. Okay, it's the markup on the inventory, okay, from the opening balance. All right, so now that I've got those two figures, go back. I've got that one and I've got that one. I've accounted for it. Okay, then I need to look at these ones. Okay, so when you look at their working, okay, if I go back to their inventory, we had the selling price. Okay, did they show the selling price? Inventory at selling price. Did they show the selling price? Yes, they did. Okay, there's the selling price. But again, the markup needs to be accounted for separately. Okay, so this was the sales, right?
Yes.
Okay, so go to your adjustment account here. Okay, this figure that I had calculated there is going to be the markup on the sales. All right, so reference that over here. Okay, so what did I have? I had the 1952.67. That needs to go there. Okay, this is representing, okay, this is the cash sales. Cash sales, asterisk, 50% markup. Okay, from my working, it's there. Okay, it's that portion. All right, then what do I need to take out? Here, the inventory. Okay, this 62, okay, is inventory to the branch. This was the markup on that stock. Okay, this needs to go into the branch adjustment. Okay, you're showing it separately. There's the 62. That's the returns. Okay, so I'm going to show the 62. Reference my 62. Needs to go there. Okay, this was inventory to the branch. Well, from the branch inventory. Also 50%. Okay, let me actually write down what this was for. This was for the returns. Okay, so I've got the 62. There's my 62. All right, what else do I have here? Okay, I've got another line. This was for my 12. This 12 was for the stolen stock, which we provided for, but we provided for it here. They want us to provide for it here as well. Okay, so I'm going to reference my 12. We had the right markup. This was for the stolen goods, hey? Asterisk 50%. Okay, what else do we have in the working? Okay, the branch adjustment discount we had, that we did have in the discount, that's fine. That I had there. The 40 is there, that's fine. The goods in transit, okay, again, they wanted to show the markup separately. Okay, so I need to reference the 25 here. 25 here. This is for goods in transit. Okay, so there's the 25, there's the 25, there's the 25. That's fine. Okay, what else? You've got the balance. Okay, the balance we need to work out. Okay, remember this balance is selling price balance. Okay, they want us to show in the branch adjustment the portion of this balance in the branch adjustment. So let's do a working for that. Okay, so this would be closing balance, 50% markup. Okay, so my closing balance was 1950 times about 50 divided by 150 gives me 650. That's where they got that. That's also fine. That I agree with. That's fine. Okay, on the right hand side, I've got this and this, and then they've got this inventory surplus of 10. Okay, that's probably the balancing figure. Okay, so delete this. Okay, I'm going to have to balance this account off. Okay, so now I've taken what I've done. Okay, so this was my answer. I'm obviously just representing all these amounts separately in the adjustment account, which I've done there. Okay, so if I sum up everything, I get that. If I sum up everything here, I get that. Okay, which side's bigger? This side is bigger. Okay, so the balancing figure would be this minus those two figures. Gives you 56. Okay, I'm getting 56 as the balance. Here, they've got 10 as a surplus. Okay, this 10.
I think it's the problem that they had with when they put cash under inventory. Remember, it was 55?
Yes, that was the cash sales, correct. Yeah, that I agree with, because that was the adjustment that we had identified. So they're saying that the 10 is for the surplus. So they're saying that the branch expenses, the cash that was stolen, but see, it wasn't cash. It wasn't inventory. It was cash. Okay, so if we had to update this, they're saying that the cash stolen had 10 rand, not 10 rand. Okay, let me just write it down. The cash that was stolen was 55. Okay, if this was inventory, okay, then you would have to show it. Okay, the cash would have been the full amount, right? So then we would have worked out the percentage. Okay, so 55 times 100 divided by 150. Okay, I'm still getting 36.666, not getting 10. Okay, let's see if there's a working for this adjustment. Why do they have an adjustment here? That's strange. Let's see. Okay, if we go look at the adjustment, let's see here. Where's the working for that adjustment? All right, here's the cost. Okay, cost, markup, selling price, fine, happy with that. Inventory, yeah, that's fine, happy with that. That was the profit, fine. That was the return, yeah, all of this is fine, happy with all of that. The discount was fine. See, they have the same working, that's fine. See, they've also got the 40. I agree with that. Ah, okay, here. I see 15 here because the goods were sold at 150 because this was a markup. So the original price is 40, that's fine. Okay, where's the working for 10? That's it, there's the end. Where's the working for 10?
I think it has to do with the gross profit. Because remember, we got 45.
Yeah, I had 55, I had 45, correct. And obviously, if I look at theirs, they've got 55 and 10.
So, yeah. I don't know.
Okay, because see, there's an asterisk here, inventory surplus. To me, this is the balancing figure. The balancing figure would be here, the balancing figure. But that comes from their branch adjustment account. Okay, I see their amount here is different to mine. Why is their figure different? Okay, they've shown branch expenses here. Branch gross profit for the year, 5970. Do you see that? I've got 5972. Is their gross profit different? Okay, so gross profit would have come from the sales minus the cost of sales. Let's see if they've got a working for that figure. Here, branch expenses. Okay, so in their branch expenses figure, they had a total of 5971. Okay, in my branch expenses, we had this, we had that, we had the 24, and then they had a profit or loss. Okay, the profit and loss comes from the working that they would have done here. The balancing figure. Because the branch inventory is what you're selling. So this is what I've given, this is what I've sold. Okay, the difference is the amount that they've accounted for in the actual adjustment account, which is what we've got there. Okay, the branch adjustment. Okay, branch inventory is fine. It's just the adjustment. This figure, this 10 is a question mark. I'm not sure where they're getting this 10 from, because I can see it makes sense here because you've got the 55 and the 10, and that's our 45. That's fine, but it's not. I just want to try reference it. Like if I'm looking at their working, okay, where did they get the 10 from? Was it a balancing figure here maybe? If you're adding up all of that and you're getting this figure, and then you're subtracting this minus those two. Let's see if that works out. Where's the calculator? Here. Okay, if you take 20,260 and you subtract 1,500, and you subtract 12,500, and you subtract
Yes.
6,250. Yeah, then I do get 10.
It's a balancing.
It
Yes.
might be from this account. So they're saying that this adjustment here is the 10, and that 10 is the amount that they're providing for in this account. Okay, so you're not balancing this account, you're balancing that account, the branch inventory. Okay, let's try to do that then to see that works. Okay, so I've done what they've done here. I just need to correct this. Okay, so I'm going to delete the stuff that we don't need. Okay, the markup here I do need because that's selling price. Okay, the markup here I do need because that's selling price. Okay, this, do I need this? Yes, this is the stolen stock. I need that. Okay, the branch adjustment I've got. That I've got. The profit I've got. Okay, did I balance this incorrectly? Maybe I did. Let me delete this. Okay, let me delete this. Okay, let me double check my balancing here. I think my balancing here is incorrect. Sum up those amounts. Enter. I get that. Sum up those amounts. What do I get? I get that. Which side is bigger?
Debit.
Yeah, I'm still going to get 45. Okay, the only difference here is, see, they've shown the cash stolen. That was what I disagreed with. I don't want to show the cash stolen here because the cash stolen is not inventory that's stolen. That's still something I'm not going to change. Okay, so remember earlier we said cash stolen. Okay, that was for the cash sales. All right, they want us to show it in the branch inventory. That's what they want us to show according to their solution. Do you see that?
Yes.
Okay, my only thought about that would be, because this is cash stolen, and because the cash that's stolen relates to this amount, okay, this is the cash sales. Do you see that? Okay, this is the cash sales. That's the cash sales, that's the cash sales. If you go back and you look at their working here, okay, they tell us that, where's the one here? A burglary took place during the year and 55 Rand in cash, bracket cash sales, and inventory to the value of that were stolen. Oh, okay. Maybe this is why they've included it. Do you see? They said no entries had been made in the records. So does that mean we have to record the sales of 55 and then record the stolen sales? Because then you would have to include it. Okay, so if you read this, okay, let me ask you this. Cheryl, the 55 Rand sales, okay, have they recorded the 55 Rand sales or haven't they?
They haven't.
Okay, if you say they haven't and no entries have been recorded, then we should show the 55 Rand as cash sales. That makes sense.
Okay, I get what you're saying. So,
Okay, so do you see? So this 55 Rand to me looks like cash sales that they didn't record, and then the burglary was only for the inventory.
okay.
Do you see that?
Yes.
Okay, I think it's the interpretation, but again, it's the wording. The wording here doesn't seem right. Let's read it again. A burglary took place during the year, fine. So the burglary relates to the 36 Rand that was stolen. Happy with that?
Yes.
And they tell us that 55 Rand in cash sales were not recorded. Do you see that?
Yes.
Okay, so in actual fact, the 55 Rand wasn't stolen. It was just missing sales. That's what we're missing. I think it's just misinterpretation of the question. A burglary took place during the year. 55 Rand in cash, which is cash sales. But you see, it still says and inventory was stolen. So to me, this means that they did steal the money, but they didn't record the theft, and then they didn't record the theft. Do you see that?
Yes.
Okay, so the only thing that I can think of that tells you why they should include this, to go back to this answer here. Okay, cash stolen for the cash sales, asterisk not included. Alright, so if you say no entries were made, those cash sales were not provided for. That's why I have to include the cash sales as part of this portion. Okay, that's why they're including the portion that was stolen. Okay, that to me that still doesn't make sense, but that seems to be what they're doing. Let's just go back to the textbook and see if there's a cash sale example. Does the textbook take out the cash sale, or do they include it? Let's get a textbook example, not a UNISA example. Let's just try clarify this. Okay, I want an example where they've taken cash. Okay, they've stolen cash. Okay, I'm looking for stolen cash. Let's find an example here. Okay, cash embezzled or stolen. I've got an example here. Example 9.5. Let's see here. Okay, branch inventory. They say here, after an investigation, it was discovered that 500 Rand cash received from cash sales of 2,000 and 250 Rand cash received from a debt in full settlement of his account. Okay, fine. Due to the pending investigation, the transactions were not yet accounted for. Alright, so if it wasn't accounted for, which is similar to this one, if I look at their solution in the textbook, cash received from cash sales. How much was stolen though? 500 Rand. Cash embezzled or stolen. Okay, the textbook says the embezzlement of cash, which is similar to the loss of money due to theft, which usually occurs before the transaction relating to the receipt of cash, is recorded in the books. See, that's what they're saying. So if they steal cash, you would have to record it in the books. if cash is embezzled from the proceeds of cash sales, 2 entries will be necessary on the credit side of branch inventory. The first entry is in respect of the amount of cash banked from cash sales, and the second relates to the cash that is embezzled. Okay, fair enough. All right, so you do have to, it's actually like double accounting, but it's not according to the textbook. All right, to me that doesn't make sense, but I'm going to go with what the textbook says. Okay, I'm going to write it down here next to this bit. Okay, NB. All right, cash embezzled. It's probably in your textbook as well. Do you have an
Yes.
example 9.5? Is it also labeled cash embezzled or stolen?
Yes.
Okay, do you see just before that example, there's a note here, there's a paragraph. Okay, the paragraph says if cash is embezzled from the proceeds of cash sales. Is that happening here? Yes, it is. The burglary took place. The cash of 55 was from cash sales. Then the textbook says 2 entries will be necessary on the credit side of branch inventory. The first entry is in respect of the amount of cash banked from cash sales, and the second entry relates to cash that is embezzled. All right, so that means I am going to have to show the embezzled cash. So show the sales and show the cash embezzlement, the cash sales. Not sales,
Can
the
you do
cash
the
stolen.
workings for that? So if there's 2 transactions, does that mean the first entry is in respect of the amount of cash banked from cash sales? And
Yes, that's what they've got here. So the amount that was banked here was the total, was the 7918. See that?
So it would be debit.
So you've got to debit the stolen cash again. That's why they're showing it separately. This is something that's unique. That's only applicable when you have an embezzlement of cash and it came from the sales. This is something that we have to include because it's stolen from the cash sales.
Okay.
Okay, so this cash was taken from the bank. So they want us to include it because of the embezzlement. Is there logic behind this? Let's see. What else does the textbook say? The textbook says the second entry relates to the cash that is embezzled. Fine. As a result of the embezzlement of money, the cash banked is therefore lower than the amount that had been received from the proceeds of the sale. The bank account is debited with cash that is banked, and the branch expense account debited with the cash that is embezzled. Okay, so that's what we had done. Okay, when we looked at the embezzlement, we said the cash would have been the branch expenses. There, see, branch expenses, 55 Rand. That is what we had done, and that's what we had done in terms of bank. The only thing we had missed was the 55. So I'm actually going to just go back. Let me go back and update my solution because we've read something here. Asterisk textbook. Okay, only for embezzlement of cash. Do you have to provide for it twice? Well, it doesn't make sense, but that's what I'm going with. That's what the textbook says we have to do. Okay, so embezzlement of cash from cash sales. All right, obviously, the cash sales already has the 55 Rand included here. They want us to also bring in the embezzlement. So 55 Rand was stolen. Okay, so delete that. Okay, this is going to be recorded. What does the textbook say? It's going to be recorded as part of the branch expenses. Yes. Okay, that's the embezzlement. Okay, so if we go back to the solution, yeah, branch expenses is what they're also showing here in uni, so that's fine. Yeah, so this would be branch expenses. Okay, there's my 55. Okay, so now if I update my solution here, sum up the left, sum up the right. If I sum up this side, I'm going to get 260. Okay, see, now I get the 10. Okay, so this side is actually bigger. If you provide, okay, this is a correction to the initial solution. Okay, I'm going to highlight that. Sorry, say that again.
From what I'm reading, I think what happened is, so then there's two transactions. The first is you need a cash sale.
Yes.
So then you would debit bank and credit branch inventory.
Correct. That's what you've
And
got
then
there.
and then when it's stolen,
Yes.
you would
You would
you
credit the
would
branch
debit
inventory and
expense.
debit the branch expenses. Is that what you're saying? Is that right?
No, okay, wait. So okay, this is it. The first entry would be debit bank, credit branch inventory, and the second would be um, debit expense and credit bank. That's why it doesn't go into the bank account, or the bank account becomes zero.
Well, yes, because we've got that. Yeah, here's the theft of cash. We did that. There's the theft of cash,
Yeah,
and there's the 55. Yeah, we had that.
but I don't think the 55 would go to bank because it would be cancelled out, is what I'm
Oh, so you're
trying to
saying this
say.
55 is incorrect
Yes.
because the money's not coming out of the bank. It's coming out of the
So basically two things
branch
happen. So that's what
inventory.
the book says. So it's two transactions. So the first workings would be debit bank, credit branch inventory, and the second would be debit expense, credit bank. So that's how the bank ends up with zero.
Oh, okay. So we need to show another amount here.
Yes.
Okay, so this branch. Okay, so then you would have branch expenses here are 55, and then you would have another line item here, not branch expenses, branch inventory.
Yes.
Okay, I hear what you're saying. Yeah. Okay, then branch inventory, which is so here's the debit, and there's the
And
credit. And then
yes.
here's the debit and there's the credit. So now we've got two.
Yeah.
Yeah, I do agree that I do need to correct this because this is something that we need to include. Yeah, so the textbook says you have to provide for it twice. Okay, so we provide for it twice. There's the debit. Let's highlight that. And then here's the credit. 55. Okay, you can't have a debit without a credit, then I would say, and then you're saying that cancels that because then it's zero.
Yes.
Then that's fine, yeah. Okay, so that's good. That's good. I'm glad we looked at this because this is unusual. Okay, and it's unusual because of this, because of the branch expense that you're also providing for, even though you've already provided for the sales. Okay, so if you do that, then this solution would be fine. Obviously, the adjustment is just something else to consider where you have to put everything into one account. But now at least we can confirm that this is correct because you can get the 10. Okay, then I get the 10, which is the branch adjustment. Okay, the branch adjustment here would be 10. It would be this minus this minus this minus this gives me that total. Okay, and then this would go to my branch adjustment. I didn't use that initially, okay, because remember I was using the branch expenses to show all that, and I was using the markups in those accounts. Okay, so you would have to provide for this 10 as an adjustment. Okay, so I'm going to leave that as is. Okay, that's fine. Okay, and then obviously here, when we did the posting, where was it? Here's it here. Okay, this was taking the adjustment account. No, taking the branch inventory account. Okay, and then we had updated it. Okay, so this I'm going to update. I'm going to take what I had here. Okay, here, copy paste this. Let's just copy the amounts. The amounts need to go here into this account. Okay, they're not sized correctly. I think I added a line. Let me add a line and then it should be the same size. Okay, let's copy this. And let's paste that there. Okay, this is what we were updating. Did I copy all of it? Yeah, I did. Okay, so let's copy that and then it'll be paste here. Still not the same. It's all the same except for the last bit. Let me just take the last bit here. Okay, this 55 is what I need to put in here. Okay. All right, and then this change, sum up all of that. And then this is the total, and then subtracts. Okay, there's the 10. All right, so yeah, it's in line with what we had up here. Branch adjustment, copy paste. Okay, so just a little note here. These general ledger accounts are to show the branch adjustments showing all the 50% markup. All right, that's why I did this again. Okay, so I took my working from above, but I've updated the working now because of that little note that we had identified in the textbook. Okay, yes, you do have to show this twice. Okay, you have to show the branch expense for the theft. This was the theft of cash. Okay, and then what I did here at the bottom is I took what we had here and we had written it there. Okay, we still need to provide for the 10 branch adjustment, and then it will balance. Okay, so if we go back to the branch inventory adjustment here, this account. Okay, so see, in the branch inventory account, okay, we had the 40. Okay, we had the this 45 will delete because the 45 no longer applies because we had provided for that 10. So we need to show the 10. Branch adjustment 10. Okay, that will change. Okay, so I'm going to have to show that 10 branch adjustment amounts. This came from the branch inventory. Okay, because if you look at my working now, that branch adjustment of 10, okay, needs to go there. Okay, so you've got the 500, you've got the 6250, and you've got the 10. The 10 is correct now because we have referenced that figure here in the branch adjustment accounts. Okay, the 62 we've got, the 12 we've got, the 40 we've got. Okay, the 25 we've got, the 650 we've got. Okay, this cash sales figure will be the difference. Okay, so what total is bigger? This side's bigger. Sum up. Okay. That's the total. That's the total. Okay, balancing figure here will be for the branch expenses. If you're closing this off, the profit figure. Okay, and the profit figure is this total minus gives you the 59. Okay, now I understand. Okay, so this solution is correct. It's just this that we had missed out. Okay, I needed to bring in the branch expense. Okay, so if you update what we had done previously, okay, the 10 we can get after we include the branch expenses as the theft of the cash. Right, so when you have embezzlement of cash from the cash sales, you do have to provide for it as well in the actual T account. Okay, and then you provide for the difference, which gives you the 10. Okay, once you've got the 10, then you would obviously show that as part of the branch adjustment to work out the profit figure. Okay, yeah, so those two figures need to change. And then this figure I'm going to delete actually. Actually, I'm not going to because it was fine. I just need to show this branch expense figure. Okay, so that amount total, there's the figure. Okay, yeah, there's the figure there. and then we had some of this won't be there. The 55 cash will stay, that will stay. The 12 and this branch adjustment no longer applies because I didn't balance this account. That goes if I update that solution. And the branch inventory 12, the stolen goods. Okay, the stolen goods we've shown. That was shown here as part of the adjustment, not part of the branch expenses. Okay, and then you've got that total. And then you'll have this minus that, minus that, minus that, gives you the 1132. Yeah, that's fine. Okay, so eventually it does work out. Head office. Okay, this would have been for the profit for the head office. Okay, all right, so yeah. So two things to note. The first thing is obviously the embezzlement of cash. That we should have included. We do need to include. Okay, and then the second thing was just these markups. Okay, all these markups that relate to the margin. Okay, the markup they want you to show separately as an adjustment, not as part of branch expenses. Right, that was something that I had to show here separate. Okay, so I took the working and I just put everything that related to the markup here and then worked out the balancing figure. The balancing figure goes to the branch expense. I need to label that. Branch adjustment amount. Okay, and then after you've done that, you balance that figure to get the final answer, which is what the head office is going to get. Okay, yeah, quite a tough one because of that embezzlement of cash. Okay, I think this one, I'm going to ask you to try look at this one and see if you can manage this one. This one looks similar. Let's do this one again next week and we can discuss it and see if we can process the same thing. Okay, so try do 8.1 and see if you can get it. And if it's the same as the solution, great. If it's not, then let's do another example. Okay, because now we know that the cash that is embezzled needs to be accounted for twice. Okay, it needs to be accounted for in the actual branch inventory as well as the adjustment account. Okay, is that all right?
Okay. Yes.
Okay, right, so try this one. Have a look at 8.3. Next week we can discuss it, we can go through it, and we can see if it's different or similar to the one that we've done, and then we can continue with the last bit. Okay, we only have one chapter left to do. Next week I can cover the theory, and then we can go through some of the examples. And then it'll probably take us 2 weeks to go through cash flow because there'll be lots of adjustments to do in terms of T accounts. Okay, so I'm going to go through the textbook examples, looking at the cash recon, not cash recon, at the cash flow statement. Okay, and we have to reconcile and we have to check that the two amounts are the same. In other words, the direct method or indirect method are the same. Once you've got the methods, then we can look at other questions. Okay, then I'll look at the assignment and we can go through that one to double check the workings to see if it's in line with what they had provided. Okay, maybe in the meantime, you said that you queried the answer for assignment 1 and then they gave you a solution. If you query assignment 2, will they give you the solution as well? Probably, right?
Yeah, so no, but then they do give the solutions. It's just a matter of when they post it.
Oh,
so
okay.
when I did, they said they're posting it this weekend. So I'll just email that to you.
Yeah, that's fine. And then we can look at those cash flow questions later on. Because I want to look at those 3 cash flow questions and I want to look at that one for the piecemeal. Did you go through the piecemeal? Was the solution, what was the problem? What was the solution showing?
Remember when we said that when a shareholder takes...
He didn't, remember, he didn't sell the vehicle. He just took the vehicle from the business.
Yes. So I think they split that, if I'm not mistaken.
Okay, because yeah, this is what we were debating last time, and we spoke about the option, and we were looking at the if the owner. So for example, where was it? Here's it here. There, the partner took furniture and equipment for their own use. you're going to take it against the capital. You're not going to affect the other partners.
Let me just send it to you quickly.
Do they want you to affect the other partners?
From what I'm seeing, yes.